Much, yeah. A couple hours left in a pretty ugly Friday here. Welcome to the close. We will take you right through to 4 o'clock this afternoon. Coming off what was a bit of a disaster for CPI this morning. Very red board to show you at this point. Again, 2 hours left. So how much more damage can be done remains to be seen. But NASDAQ leads right now 3% to the downside, 2.5% for the S&P 500, trying to get back towards day lows as we speak. 2.1 for the Dow right now, but top to bottom, heavy selling. Crude oil did bounce a little bit there, 0.73 right now for oil, back to the upside. I won't show you the board again because you've seen it enough today. I feel like it's very red. There's not much in the way of green to talk about. So all sectors of the S&P 500 to the downside currently. We'll see if we get any kind of stability here heading into the close. But it has been one of those days. Yeah, this just happened. I mean, the guys were talking about it there, but Revlon here, wow. $4 was doing absolutely nothing throughout the day, and then that happened. So halted currently 27% to the downside for REV. Just seeing apparently Cassava Sciences just popping up here on some volume as well. I'll try and show you SAVA, not much volume if there is any, but anyways, hope your Friday afternoon is going well, even with this pretty bad market we have to deal with here heading into the weekend. If you are joining us for the first time in the afternoon, we'll take some time and revisit some of the opportunities that we had in the pre-market this morning. If you remember, it was all about inflation. The CPI number comes out at 8:30, higher than expected, 8.6% year over year. That is a 40-year high for inflation in the U.S. Last time it was there was 1981. Neil was 2 when it was that high the last time. I was only 1, Neil. So there's that. Here he comes. Neil's up first with review.
Thank you very much. We're going to talk a little bit about DocuSign. Brendan has me in a kerfuffle right now because he just told everybody my age, so I'm not that young. But we're going to talk about DocuSign, and the interesting thing about this is guidance was poor. The stock still trades at 38 times, down 25%, but we're going to talk about it long. And this morning I said a little something that was, if it doesn't break the low, there's only one way for it to go. And that's to the upside. But it's mostly because of what I saw happen in Gap and a few other names where you come in, doom and gloom, everybody and their mother says they got blown out, it's a beat up stock, it's going to flush today, but it has gapped down so far and the squeeze happens. Now, DocuSign doesn't have more than a 6 or 7% short interest, so it's not quite in that bucket. However, when you look at what happened here, and I'm only going to pull the daily chart back into this year, but if you go all the way back to the pandemic, this 65 level that I have drawn down here, that is your 2020 low. So you've essentially made a bottom at that 2020 low just recently here in May. And then you had that twice. So you got a huge level on the daily chart. You come in and you are gapped down below that level. You've already broken this thing and broken below it. And then you've come a little bit higher. I've seen this set up this quarter so many times in a stock that you just want to be short because it's going down, and everyday traders thinking the same thing. But if it doesn't break that low at the open, only one place for it to go, and that is to the upside. So I saw doesn't get through the low of the day, doesn't get through the low of the day. Then we are back above that 65 level. You've got a multi-year low on the daily chart that is now holding in the pre-market. That sets up 2 trades. One, which is only a small win, which is the breakout of the pre-market top at the open. It's a quick scalp trade. But the other one is retest that bottom. You can see the wick, hold the low, hold the line, and then grab the higher low. Now you're absolutely off to the races. And remember, you are going long in a market that is getting trashed. You had a CPI number which was way too hot and was also sending the market into its lows. And the weakest stock out there, you are going long because it was a relief rally. Shorts got to cover too. So it broke out. You're able to catch a quick $1.20 off the first leg. And then at that point, I'm thinking, where do you get out? There's only one mistake that got made here. I had this 70 level drawn out, previous support turning into resistance. I knew this is where I thought things could turn around. That's where I would want to wait to try to think about a short trade here. It put one test into 69, and then as it's curling, I take the rest of this one out thinking I need to be thinking short after this next move up. He had a wick high at 70, couldn't quite get the entry point tight enough to the high of the day, and you can see what happens after that. The key thing about this is you don't want to get married to a certain direction or a bias in a trade. Just because something is beaten up doesn't mean it has to go down. If it's already come down super far, then there's just more shorts to cover than anything else. And in that case, if you want to go with the momentum, you might just have to take the long. And I've seen this setup work far too many times. The last 2 times, the only thing I did with it was cover my short and not get run over. And this time, I decided, no, we're not even going to take the short. We're just going to make the long. You've got to adjust to the market that you're in. And in this particular case, these 20, 30% down moves on earnings, if it doesn't take the low, there's only one place to go. DocuSign gave you the win long side in one of the weakest markets we've seen.
Pretty amazing move overall for DocuSign this morning, giving all of the pandemic back. We're right back to the beginning of 2020. It's amazing, like it never even happened. That's the DocuSign was on the watch list, if you're wondering. That's linked to the watch list, guys. Grab that every morning. Absolutely free for you from us every day before we come on at 8:30. Revlon open again, just bounced off 260 there. Big volume still on this REV if you missed it. Declaring bankruptcy is Revlon. So this has been kind of in the works, as the guys were hinting at there. For a week or so, they were trying to get some new financing. It popped up on heavy volume on that news. Wait a minute, that's Cassava. Let me refresh, and we'll go back to, if you look at a daily chart, there is a day when it popped up on news that they were looking at getting some financing in place. But back to the downside we go for REV on this bankruptcy filing. Okay, we talked about it a little bit this morning. Trader Brad mentioned it as well. It is a Friday afternoon. Sean is taking a little bit of an extra long weekend. We wish him well. Hope he's enjoying the Friday afternoon. But everyone's favorite, Tony, is here for Friday.
Wow, thank you to the guys that worked on that animation. That is great over there, really high quality. Thank you. It's been great to be back on a Friday afternoon here with Neil, and we're going to commentate these markets for you. Very explosive day today to the downside, unfortunately, on those CPI numbers, as Brendan mentioned, 8.6, harder than expected. I know yesterday me and Ian were mentioning how this is going to turn the market straight one way or the other, but it turns out that to the downside and by quite a large magnitude. I know as you talked about your DocuSign trade today, and that was quite well. One of those names that I think was just beaten up way too hard in the pre-market, and yesterday after the earnings report, couldn't really go down any further. Yeah, wow, explosive day today for the markets. Q's down 3%, S&P hot in pursuit, down 2.5%. I think we're trying to find a little bit of support here at the 290 level on the ETF, trying to desperately find a bottom here, trying to curl back up into the close on a Friday afternoon. Let's see if we can do it. I think it's going to be a gapper Monday morning on the futures, or Sunday afternoon, I should say, when futures open. Possibly to the downside as well, 8.6. Inflation not slowing down anytime soon. We did not see the absolute peak here in May, and this just increases the probability that the Fed has to do something quick, possibly an emergency rate hike, as some people were alluding to. Although I don't think it's a possibility, but the 50 basis points raise next week, I think that is almost a certainty at this point, with inflation hot on red hot, 41-year high.
Yeah, and look, one thing obviously with that CPI number is, we shocked the market to the downside, but it is worth mentioning we're in like the longest consolidation known to man. No, I'm sort of kidding about that. It's like it's not that bad, and I'm going to kind of cheat here because I have a 60-minute that I usually use. But if I blow it up here, like look at what's going on here at the low end. Like we flushed this morning. But really the ES, yeah, we've been range bound pretty much the entire afternoon, holding 39 and holding 39.25 or so to the upside. There was just a bit of a false breakout that we just saw now. But overall, like we've been channeling. We haven't really it hasn't gotten any worse. We're not really breaking out. So it's really tempting to sit there and try to bottom pick, and I'm Amazon, I suppose, so I guess I'm doing it, to try and bottom pick or get overextended. I think you just play within the range to the best of our abilities. Obviously Revlon, this came out of nowhere. I didn't really, bankruptcy out of nowhere. So obviously, this is one that we're going to be watching. I might have to see if I can't get a playoff of like $3 or something like that. But it is a threat. It starts slowing down in volume. It's a threat to reclaim these lows. It's a threat to jailbreak to the upside. A lot can happen here. I did finally jump into UVXY. I said I haven't traded this in a while. But I was, and this morning I sort of said like the only trade would have been, everyone was focused on so much else. All my old like channels that I had drawn here, there was a breakout this morning, obviously in volatility. I could have taken this, but I wasn't paying attention. DocuSign, Netflix, I mean, Micron, Intel, there was so many other things to look at. However, I did mention this morning, yeah, but I was just waiting. The only other level I saw was to come right back up to a 15 quarter that I had drawn. And when we had a wick high here, I mean, the setup. We've probably seen me trade it in equities all the time. Hit the high, your key price level, you break down, you consolidate off of it, and then the consolidation was right here around 15. A little bit more of a move than you'll get if you were just kind of like trying to scalp along in something like here on Netflix or something like that. So quick little short, right back into this consolidation view up. I still have a piece of this trade, but that's the kind of play that I've been making on UVXY. I've essentially been drawing my channels out. I haven't done this in a week or so, but drawing out the channels, then playing off these levels. Like whether it's, like, oh my goodness, like yesterday, like should I not have had this break in the afternoon show? We were talking about what trades could you have. I was trying to catch these silly longs off the bottom and really missing out on any shorts because I'd taken them all off in the morning. This is what you got to think about. Like this one, we actually held this channel, broke out from it here, so that's not that bad. You take a 13.10, stop is back to where I had my previous support level, and then that just rallied into the close. So I'm going to get back to trading some of this. I don't know if I need to be reloading it if we retest the highs. That seems a little crazy on a free fall Friday, but certainly UVXY is back on my mind.
Yeah, rightfully so. A lot of volatility initially this morning. We're coming off a little bit, as Neil was mentioning there, but definitely worth a look. REDU, another one moving around here. Big move down initially this morning, was halting on the way back to the upside. Let's talk a little bit about some Chinese ADRs that we were looking at in the pre-market. If you joined us at 8:30 this morning, they were all gapping to the upside on continued momentum, continued discussions in China about reopening and getting things back to normal post-COVID. So they all had big gaps. They all then proceeded to fade those gaps and are now basically negative across the board.
Oh, nothing could survive going negative. And just to give an idea, it wasn't all great this morning. I was favoring shorts, and we're sitting in some good ones, but the reality was there were a couple of things I liked to the long side. And NEO had its own news. It was part of that gap up as well. And it had, of course, they talked about making their own batteries, and there was a bit of a positive catalyst. And about the only thing that led me to this name was, quite simply, it held the lows yesterday. Like of all the things everything was crashing in the afternoon, and NEO was one of the few stocks out there that didn't actually take out its morning low at the close. The 1860 area held. You had a channel down to 1845, and you can see that's all I did. I went long in front of 60. I didn't want to add unless it was into that channel at 45. And I mean, the second I even tried to get the bounce off of the bottom of the channel, it essentially broke. And you know what the problem is here? I was mostly short the entire morning, but sort of struggling to find new ones, which sort of hanging on to what we had. Shouldn't have been that hard because look at NEO. Look what happens when it goes back into the same channel. If your channel is 45 to 60, well, it breaks down, gets to 18 bucks, recovers, gets to 45. I'll zoom in so you guys can see this one a little bit better. If you're just looking for a short, this is what you got to do. Gets into this 45 area. Does it come anywhere close to breaking the top end of that channel? No. Also happens to be around VWAP. It then falls from here. So why am I not short when it gets back below that channel right here? You set your stop up at 60, 65. You're still in the trade if that's what you're doing. So you take these levels and understand that they always come back to you. Like there's always a chance. I mean, not that they don't always come back to you, but you should reevaluate them or get back into them. And another point is, I said this morning, everything that you were looking at level-wise yesterday, if you just waited till after 10 o'clock and then put those same trades on, wow, was that a day maker. And the same thing here. If you reevaluated this after 10 o'clock and just said, okay, well, I know where my levels are and I know where the trend is, what should I do here? I think that's as clear as day. Downward trend, down market, you're rejecting a key price area. Go short. I didn't do it on NEO, but at least we can rectify that mistake next time.
some other Chinese stocks as well. Now, Alibaba, another name, looks quite like NIO in terms of its patterns. Rejected at 114 today, which is kind of crazy. I think that's up 5% on such a red day, but now trading much below that. I believe red on the day now, or at least going red. Difficult to break above VWAP. Some of these Chinese names now following the rest of the U.S. markets. Tech sector down huge, 3.24%. I'm trying to bet in favor of recovery on the S&P, but it looks like this trade's not quite working out. Hoping not to break towards daily lows now, towards power hour, but anything is possible. Chinese stocks again. We're up quite a bit, or up a little bit for today, but now changing course and going it down towards the downside. Looking at many other names, not too much today besides a sea of red. A lot of my names today. If you want to take a look at some of the sectors I'm looking at, primarily technology, but as you can see, just mostly red. My beloved Upstart now down 4%. People are asking me about Unity. Should they be holding it, or should I be holding it? Down quite a bit now, $37, down 9% on the day. I think this is the time to go shopping, but who knows? With a look at the S&P again on the ETF over here, I wouldn't be surprised if we start to break 52-week lows once again. We've seen it today with DocuSign. This stock hit $64 in the pre-market now, I think trading a bit above it. Again, as Neil was saying about the stock earlier with his trade today, sometimes just get beaten up a little bit too hard where it can't really go much lower. That being said, we are not really going anywhere today. I think it's a bit of a no man's land. Will DocuSign go lower? I think this is going to be dependent on the Qs. We are now just 3% above the 52-week low, which we hit less than a month ago, I think just a couple weeks ago now. I think whatever short recovery we had in this moment, we're trading in the range of around 302 to 310. It has now been broken towards the downside on the CPI news, higher than expected inflation numbers, and as a result, we should expect further interest rate increases to combat the cost of the rising cost of a lot of consumer goods. But yeah, nasty days for the Qs, and I think all of this is felt worldwide, as with the Chinese stocks reversing. My trade of the day, I'm taking a look at mostly Revlon. Again, I'm hoping for some sort of recovery on the S&P into the end of the day here. But besides that, just a sea of red, and I think usually I'd like to go with the trend rather than against it. So I might just get stopped out on this trade shortly thereafter. But at the moment, I think, yeah, there is not an awful lot to be... I'm just waiting at the moment to see if we can break one way or the other. We're going to see if volatility can kind of spike towards the end of the weekly trading session over here. And if we break towards a new daily low, I think that's something I would be interested in looking at. But for the moment, it looks like it's still a decent recovery. The Qs are now about almost 0.5%, or I think just over 0.5% off the lows. So for the moment, I am still long on the S&P for the time being. But yeah, I'm taking a look at my watch list over here, seeing if I can find any stocks that I favor to the upside or to the downside if the ETFs and the indices reverse course.
Pretty amazing when you look at that daily chart. Tony had the Qs up there. You know, the amount of time it took to make that recovery, and then the amount of time we spent in that consolidation. You know, we give all of that back here in one day, immediately right back to the lows on the daily chart. Let's go on to DocuSign. We were talking about DocuSign earnings. You heard Neil's take off the open there, still kind of struggling around this 66 area after the earnings were not good at all for DocuSign. The forecast even worse. It was 38 versus 46 per share. 2.7 was the forecast. They come out at 2.52. So back to pre-pandemic levels here for Docu.
So, I mean, you heard me wax poetic about DocuSign, so I'll leave it to Tony except for one thing. I do want to make a slight apology this morning because I got asked in the chat before we were about to end the show, would I reload DocuSign? And I was like, no, I wouldn't reload it because it rejected 70. I thought it was a short from that price. The market was heading to the downside. I was like, yeah, don't reload it. But what I didn't actually consider, because I was talking about this load here, at 66 at the open where we had it. But really, what I think might have been the intention was the whole notion of if it doesn't break the low, you're good to go, or it can only one way to go. Maybe it was along those lines. And that was a bit of a mistake because it does hold the low, and then it just breaks back out and has now held that consolidation, this time at 65. So, you know, that was obviously a bit of a whiff. I heard Ian talk about, I think in the midday, about that being a good notion, and I kind of said not to do it, but I didn't really examine the second part of that, which would be the fact that it did in fact end up holding that low.
DocuSign, not too much volatility on the day. I think just mostly holding a couple dollar range there. Again, market I think kind of made its move in pre-market and yesterday's after-hour session. As you can see on the candle here, not too much of a body. But like you were saying, in terms of or as Brendan was saying, I should say, in the grand scheme of things, it's crazy how far this name has fallen from all the way over $300 back in the summer of just last year. Now we're back at pre-pandemic levels towards what used to be resistance is now support at the $65 level. This again was at a 52-week low today on the earnings miss. I think higher than expected revenues, and they're forecasting $600 million for next quarter, but lower than expected earnings, and adjusted earnings were 38 cents versus the expected 46. Looking at this company's balance sheet, it's actually not as well capitalized as I expected. $13 billion company here with revenues trailing 12 months of just $2 billion. And if you look at their balance sheet over here on Yahoo Finance, assets versus their liabilities, nothing really to be getting excited about. I think this company is still one that's overvalued at $65. Again, a nice pandemic name, and this was much higher. But looking back, it's just kind of crazy to think, wow, DocuSign was once above $50 billion valuation, as with names like Carvana and Wayfair that have now corrected very much so as the interest rates are now rising and consumer demand has waned quite a little bit. I got to say, off these CPI numbers today, I'm actually a little bit more concerned about the economy. For the past couple of months, I'm just seeing these stocks kind of fall a little bit, and it's not good seeing. For the shareholders, obviously, but for someone doesn't quite have a lot of skin in the name, I've been getting a little bit excited, trying to buy into some of these investments, perhaps with my personal account. But now I think they've been falling a little bit too far from grace, and now I'm a little bit concerned. You see news about Snapchat and Tesla saying that they are adjusting guidance, or I guess Tesla said that Elon Musk said, I should say, that he has a very bad feeling about the economy. Snapchat revised their guidance, as did Target the other day. So economy coming to a slowdown as aggregate demand is waning. Now you have high CPI numbers. We are perhaps nearing stagflation territory of the late 70s and early 80s, when there was also an oil crisis in the Middle East. So it's be interesting to see what happens in the next couple of months. Hopefully, seeing what happens to gas prices. I'm not sure if I think you do drive to work, Neil. You've been feeling the pain at the pump a little bit?
I actually take transit in. I'm a train guy. Like I like to. I said to one of the traders like back a couple of weeks ago. Like if I'm not reading, I'm not living. And when you have a kid, the only time I actually have to read and enjoy my novels is when I'm on my commute on the train. So I drive to the station back, which is like 5 minutes. I'm laughing. Every now and then I have to drive in. So for me to pretend that I'm feeling the pain at the pump like other people are, that would kind of be a little bit dishonest. But the truth of the matter is, and you sort of said that like stagflation, you start getting oil prices where they are, and obviously you understand that we're getting a raising rate environment. Housing affordability is about as low as it's ever been, and you're seeing that start to push back. Mortgage rates are going to go up. That's the kind of thing that almost always leads to a recession. And like you said, the next step would be stagflation. The one thing that's weird about it, though, is when you look at unemployment, which is still lagging. However, what have you seen recently? How many earnings calls have we seen where it's like, well, yeah, we're laying off X%, we're slowing hiring, Tesla coming out slowing hiring. So if all of these companies in the last earnings round have been talking about how they're pulling back on hiring, there's going to be some targeted layoffs. Last I checked, we're going to catch up when it comes to the employment numbers, probably in the next quarter or so. And all of a sudden, if we see unemployment start to creep back into the upside, well, that's that last thing that's been holding on. You want to say the economy is super strong. It would be that employment, which has been holding up pretty well, but there's some signs that could end.
Yeah, no, I've been seeing those signs. I saw Netflix laid off 150 people in May, and I've been reading a lot of threads these days, personal finance threads. A lot of Coinbase employees that already accepted their offers straight from graduate school, got their offers, re-signed it, just because Coinbase said that the new market conditions do not support us trying to triple our headcount for the year. And so it's, I'd imagine if the public companies, I think Elon Musk also said, trying to trim 10% of management as well. So I can only imagine how it's hitting less well-capitalized companies that perhaps even have the need to raise funds moving forward. We saw Revlon was unsuccessful in doing so and has now filed for Chapter 11, now down 50%. Jeez, they're entering liquidation at this point. I don't think they have much assets. Wow, what a short, down 50%.
Why wait for 3? That's awesome.
And I remember Citigroup tried to pay it off, or accidentally paid off all of Revlon's debts, I think like about a year and a half ago or 2 years ago. And they weren't actually able to get that money back after some sort of a banking error. I think that's what kind of drove Revlon up from all the way from I think the same price here towards, I guess it was in more recent times. This is a weekly chart, but they had a bit of a gaffe there at Citigroup Revlon where they accidentally wired the wrong amount in, and Revlon was $17 back last year, but now Chapter 11. So unfortunate end to an interesting company.
All right, let's continue along here. A couple other things to discuss, guys. AMD was on watch this morning. Also, Netflix was on watch this morning. We were talking about one to the upside, one to the downside. AMD was actually the one on the strong side of things. If you remember, after that analyst event they had late in the day yesterday, a lot of product announcements coming out of that, a lot of projections on the financials coming out of that. So a number of positive notes from analysts today on AMD. Netflix, on the other hand, very, very weak, very obvious on the weak side as well in the pre-market this morning after Goldman cuts Netflix to a sell rating, which is kind of rare for a GS.
Yeah, I'll start with Netflix because I actually just I just got out of my trade. It was basically one idea that I didn't think was going to come into play, which is really weird. Like this morning, everything was so weak this morning, I think when we sat down and Netflix had gapped down. Like when that number came out, like Netflix was at 181, I sort of said to myself, oh, I like this in front of 85, right? And at the time, after we got that CPI number, I just sort of figured, well, I'm not going to see that, so let's forget about Netflix. And then all of a sudden, we came charging into the open. I apologize for that wick. Every time I try to clean this wick up, my chart crashes, so I'm not going to be able to scale this for you properly. But we had this crazy move to the upside, right to 186, and then an immediate rejection. So much like so many times we've seen this before, like these wick off tops, these wick off bottoms, you essentially got that at exactly the level I wanted. I was like, oh, okay, well that's interesting. So I short the 185. I try to hold on for dear life, like the home run trade, like on Micron this morning. But we end up with, it goes down to 181. I don't take it off. I end up reloading a second time right before the end of the show, played it to VWAP. It did stop out, but then it basically reestablished itself when it had a wick off top there at 185 a little bit later on at noon, and then it just sort of went back to the well, scalping it, but it's turned into a VWAP play because the low got held. And it's very much like DocuSign. I mean, I didn't go long here because I didn't really see a long unless you were right off 182, and at that time, I was still thinking the short was going to work out better. So we bounced off 181 a few times, and then it just turned into this, you can get $1 out of the trade, maybe $1.25 over and over again. I just covered it now because the futures broke out of their channel. So I have some of my Amazon long left. I have some UVXY to the short side, but no more Netflix short that we've been going back and forth off that 185. As for AMD, they got the upgrades. I was shorting Micron because Micron was on the granddaddy of all levels that everyone on the floor was looking at here today. You can go all the way. I mean, Micron, I don't know how far this is going to go back, but you had a quadruple bottom on Micron on the daily for this year, and then you had a low from October of last year, and I could trail back even further, and you can see what this looks like below that shelf. So needless to say, Micron below 66, short it. That basically was the entire thesis for for a lot of people that were trading on the floor today. When it gets to a shelf like that, and you just had to be able to take it. AMD I didn't really get because if there had been long setups I wanted them, I just didn't see any.
That's right. And speaking about, I know you talked about Netflix earlier for today, downgrade coming in. I remember Netflix, Roku had some news earlier this week about a potential buyout offer for Roku, but seems that with these market conditions coming in for the past 2 days, much of that probably won't materialize, not that it had much chance of materializing in the first place, in my opinion. Roku now down 20%, I believe, from Wednesday, now trading at $83, all the way down from, I think, 104, 105 on the buyout rumors. But yeah, it's just been absolutely nasty for a lot of these tech names, and Roku's nothing special in particular, down 10% on the day, a little bit more than some of the other names, but nonetheless, it's just been bloody for the tech sector. I saw Ulta Beauty being mentioned in the chat as well. Interestingly, this is one name that I think held up quite nicely in comparison to other names as well. Ulta, I think, is pretty much close to all-time highs, actually, if I can pull up the chart over here. Pulling up a daily chart if I could, and you know, it's obviously down 2% on the day, but this has been holding up a lot better than a lot of discretionary stocks, in my opinion. I think somebody was saying that women don't stop purchasing these cosmetic goods, and I think evidenced by the performance of this stock and what Target was saying, that's right. Target was saying that it had a lot of difficulty in selling some of its inventory, particularly hardware items and furniture, home goods. But beauty products were not going to be discounted because they had no trouble selling beauty products. And that somewhat supports Ulta's strong stock performance in more recent times, where it's like it's discretionary, but at the same time, maybe not that much so. So Ulta Beauty, strong stock to look at and perhaps to invest in at these levels, holding up quite nicely as we see reduced consumer demand. But that being said, at the moment, I am trying to find a bottom on the S&P and the Qs here, entering into long positions. I know I said, you know, this might be a sell-off into the close, especially since we're entering the weekend now. A gap down on Monday morning may be warranted as people continue to digest the CPI numbers and the fact that we are at a 41-year high for inflation. But nonetheless, I think I'm trying to find a balance over here. It just seems to be a bit too sold off at the moment, down 3%, and for the Qs and 2 1/3 respectively for the S&P. But at the moment, I think the markets aren't really making a huge move one way or the other, so we shall see where this goes. I'm hoping to see the S&P break VWAP on the day, but I think at the moment it's struggling. It's trying to do so, got rejected once, and I'm trying to see if it can break through perhaps third time's the charm. But yeah, Ulta Beauty, another name that's holding up really well. I think in this economy, I think if you're holding a lot of oil names, or if you're holding just consumer staples, you're actually doing quite well. I think Colgate and Kellogg are two names that comes to mind when I think of consumer staples. People need their toothpaste and people need their cereal. So those hold up really well in an economic recession. That being said, they're not going to give you tech-like gains for if you're trying to get rich in a shorter amount of time. But for long-term investments, dividend-paying stocks, always nice to have in a recession. Does better than the growth stocks, that's for sure.
So, sorry there, Brendan. The position board, I think the position board probably got refreshed. I'm still long Amazon 109.43. UVXY still have the short at 15.02, but I think they refreshed it because there was something showing for Sean, who's obviously not here. So I think I have to, the next execution I get, it usually corrects itself. And by the way, before we go back to Brendan, Revlon just halted to the upside.
Ooh.
So
that's something we see every day.
Sometimes that initial push, like the flush out at the bottom, I should have been watching this closer because $2 is where it bounced. We'll see. Like if it's even a muted pull, bounce, there might be a reopen play here where if you can play it off of that 250 with a tight stop, you can get a little scalp trade, maybe into the 75 to 80 area. But yeah, I mean, even sometimes you get a bit of a dead cat bounce. It just is what it is. So Revlon to the upside in the volatility halt.
Big story, guys. We were talking about a little bit yesterday with Jeff Mendel from OTC Markets. Obviously, Didi. Last day of trading today. It's been a very quiet one, but here's the note from Reuters. Last day, Friday the 10th, which is today, obviously. After last month, a majority of shareholders voted in favor of withdrawing from the NYSE to pursue a Hong Kong listing, which, as far as I know, has not happened yet. But you heard Jeff on this show yesterday talking a little bit about the OTC. Typically, if Didi comes out of one of the big boards, immediately goes down to, or if any stock comes out of one of the big boards, immediately goes down to trade over the counter. He wasn't 100% sure on whether that was going to happen because the company itself actually doesn't want it to happen. They want to go to Hong Kong. So anyways, Didi Global, guys, not much to see so far today.
Well, maybe not. And there we go. There we go. I finally corrected there. So you guys can see I'm still in those two positions. Didi actually caught a bid today, and obviously, the company's not going anywhere, right? So, where they end up listed next is anyone's guess at this particular point. But it actually caught a bid. Now, if you remember the other day, a couple of days ago, 3 days ago, maybe it was last week, it wasn't that long ago, there was a gigantic sell imbalance on Didi, like 55 million shares that ended up holding up. And I remember it just absolutely flushing into the close. I don't know, maybe it'll show on my 15-minute to close the day. Yeah, I think it was this day. So it would have been, okay, it was on Monday. It just absolutely died going into the close. And then oddly enough, that same price, just a quick look, it was at that 245 area. Huge monster sell and bounce. Look at that same price. Next day, top rejection. The next day, breakout consolidation support. Day after that, you have support broken into resistance. And then today, resistance falls. Breaks back upside. right to that same level and fall. So keep in mind, that is the point at which there was an imbalance to the sell side at that 245 price. So if there's any kind of pop in Didi going into the close on its last day of trade on the NYSE, then I think I want to be shorting in front of that 250 level, or at least that 245 from what I've been able to see the way it trades at that price level.
Absolutely. Didi holding up quite nicely for today, not really moving on a day where NASDAQ's down 3%. I believe that for a name like this, I'm not sure what happens once it gets delisted from the New York Stock Exchange, what happens to the shareholders that are left holding it, at least under U.S. brokerage accounts that don't really support the Hong Kong listed shares. And so I noticed that for other Chinese stocks that have been delisted in the past, unfortunately what happens right after the delisting is that you have an artificial sell pressure where people can't really enter into the stock, but they can only sell, kind of what happens to I think some other stocks in the past where the broker only lets you close out your position. So that's my only concern holding Didi as a long position into the close today. But wow, holding up quite nicely. I think gapped up quite a bit on Chinese news, slowing down coronavirus restrictions or removing them altogether, or at least part of them. But yeah, trading around 235 at the moment. Revlon, interesting company, still halted at the moment. I'm taking a look at the balance sheet on Revlon. Does not look very strong at all. In fact, I think they're net $2 billion in debt, hence the bankruptcy. And as for the market capitalization of this company itself, it's only a $100 million company. So I don't think there's going to be much left for shareholders after preferred bondholders or after all debt holders are paid. So I think it's my opinion that a short here may be warranted. That being said, shorts do need to cover their position at some point or another. But so far, if the news is true and they do start news that comes out that they're commencing bankruptcy procedures, for certain, this name I think will start to converge towards zero, as this company is purely trading off of not their book value, but just their prospects of one day becoming profitable, perhaps, which won't happen at this rate based on the fact that they're unable to receive further financing for their business operations. Looking at the markets today, a lot of interesting companies hitting 52-week lows as I see it. Carnival Corp being one of the larger names. I thought they were actually doing quite well these days. They're not quite well, but off 52-week lows, apparently not trading now at $11. If you take a look at some other names, DocuSign, another name, terrible earnings today, down 25%. Low of $64.31 today, $64 in the pre-market. Another major mover. This used to be my list to try to find some bargain names, but since the markets are in a correction now, I think it's pretty easy to just short a lot of names you see on this board of top losers, or 52-week low stocks. But yeah, it's just fascinating to see so many good names on this 52-week low list. Boston Scientific, Lyft, two major names there. What else? Cloudflare, $47. This was a darling of the pandemic, hit $200 not that long ago, but again, overpriced relative to their revenues. I believe they posted about $750 million in fiscal year 2021, and they're trading at something like a $16 billion valuation, if I can remember correctly, at this price value. So I think we are still in the midst of a correction. A lot of these tech names, despite falling 70-80% from the highs, are still possibly overvalued. And so, while I am bargain hunting in this environment for good long-term investments, you still got to remember how the interest rate sort of affects a lot of these companies. I think one thing I heard was that every 1% increase in the interest rates could shake actual valuations of these growth companies by 15 to 25%, depending on how well capitalized they are. So just keep that in mind as inflation data comes out today, and probably convincing news that Powell needs to continue raising interest rates to combat inflation or hyperinflation, as we might start to see. So a lot of these names just very far fall from grace, but just be careful with these valuations and getting into some of these names.
We get a lot of questions about bear markets, guys. We're going to talk a little bit about day trading specifically. We've had a ton of questions recently regarding how we should adjust our day trading skills and our day trading strategies in general because we're in a bear market. And I'll even throw the question out at this point, does it matter if you're a day trader that we're in a bear market?
I say it does. So my answer to that would be a yes. And I think actually having traded yesterday in the afternoon, for those of us that were watching yesterday in the afternoon, everybody likes trying to buy the dip and catching bids. So the simple thing that I would suggest is, in a bear market, resistance matters more than support. It sounds pretty obvious, and I suppose it is obvious because the market's heading down, but it matters. And that simply means you should have far more confidence shorting in front of resistance, covering longs in front of resistance before it breaks through, then you should have buying in front of support. That's all it works out to. And just as an example here, I'm going to show you Microsoft. I'm choosing Microsoft because it kind of shows the point a little bit better than most other things. And obviously, it's a little bit of a cherry pick, but I think it demonstrates it pretty well here. You look at the last little bit, it had this resistance level at 275, and you can see how many times, or 74, 75, how many times it's able to sort of break out, not sustain it, reestablish, try to break, can't go. But what happens each time it gets away from that level? It's rejecting that price level to the downside more than it's able to ever break out. Right? So the move is stronger southbound off of the resistance level. And then what happens at your support levels? Okay, well, you have a little bit of support here that goes one stage up. Okay, doesn't quite even get into our big resistance. It goes close. We had a wipeout bottom, a little bit different because this here support is actually broken. You have a V-shaped wipeout bottom that actually tracked $5 below your support. So that's actually breaking your support and then retracing it. So you can't really count that. And then what happens when you actually break down and hold below support? Well, I'll tell you what happens. You blow through multiple levels. Like you flush away from that price. There's no wick. None of that nonsense. Even this wick here, when it breaks the 65, like that's a $4 or $5 wick. When it broke the 73 area, like it went $2 or $3. Like even that wipeout was bigger than your breakout. And when you held below, it's just absolutely flushing. So there's a bigger reward from a consistency level to respect the resistance, consistently trade off of it to the downside, and then understand when support is broken, instead of trying to defend it, you should just go with it. I could have shown Micron when it broke that support level down, downside, then you have it turn into resistance. But I like Microsoft here because it shows you the value and the consistency of just shorting every single one of these tops. And in a bull market, when you're just buying the dips, great, of course. But we're in a bear market, so you got to adjust your flow.
That's right, got to address your flow. And to me, I think you also got to address your share prices. In such a bear market, you got to be careful about the market volatility that starts to accelerate higher and higher. This means a lot of things. One being that the option prices are a lot more expensive now, since the range of where the stock might end up a week or two from now starts to increase as the market's preparing for a huge move one way or the other. But this also means that you got to be careful, like said about your support resistance levels, since they can just flow through on heavy volume buying and selling. The common saying I think goes stairs up and elevator down. Crashes are nasty and they happen like a flash. So you got to be careful with your share positions, and you also have to make sure you have a stop loss because they can blow past at any moment. And of course, stop losses go both ways. You could get saved, or it might just go against you and move right back up. So that's always an issue you got to worry about. I think for me, the biggest thing in bear markets as well, there's a lot more opportunities, let's say, in the option markets environment, where premiums are now much higher because of the implied volatility being elevated. You can see here on the VIX now nearing 30 for the S&P volatility. This is a traditionally high level. You don't really see it stay at this level very often. Throughout 2021, we've seen it much lower, around 15 or 20. I know for a lot of these tech names like Upstart, we've been seeing higher realized volatility as well as implied volatility. A lot of these names you can trade monthly options with 120% annualized implied volatility. So this is option selling environment if you believe that some of these stocks will pretty much consolidate or stay at the price they currently are for the extended period. But also, if you're trying to bet on a huge move one way or the other, prepare to pay up a little bit more money, just because I think the market already priced in the possibility that there will be a huge move as well. So a lot of opportunities to go with in the options market, a lot more strategies as well that become a lot more lucrative. If you want to take a look at calendar spreads, for instance, really interesting payoff if you believe that the stock will either consolidate for next month or will move in a huge direction. Calendar spreads, vertical spreads, always fun to play with. I know Danielle Shea unfortunately wasn't here yesterday, but she'd be talking all about that. And so be careful if you're an option buyer in this environment. But that being said, I think option buyers, if you also have those diamond hands, will be rewarded quite nicely, since these huge moves are no joke. So just be careful about your share sizes and be careful about getting stopped out, because this is a very volatile market and oftentimes towards the downside. So just be careful about that.
Directionally, things change this year, definitely back to the downside. If your time frame is days, if your time frame is weeks, if your time frame is even intraday, we have to be able to adjust to the market environment we are working with, higher volatility. And just because you're moving in one direction doesn't mean there aren't great opportunities on the long side, though. So definitely some changes in a bear market if you are a day trader. I wanted to mention Peloton real quick before we move on here. Down 5.5 anyways on the day. But Peloton just came out, guys, and said they'll give you 100 days free to try their bike now. If anyone's interested in a Peloton. Frank is with us, and Frank is ready. Why don't we bring in Frank? Frank Caberna, Director of Product Content and Creative at the Small Exchange, back with us on a Friday for a look at what has been a crazy day. Obviously, coming off this number this morning, Frank, we've had extreme volatility and monster moves, to say the least, both in the U.S. dollar and some of these treasuries going nuts again. I mean, give us your take here. First off, to be expected, I guess, hotter than expected on the inflation front today, but pretty impressive on the USD today.
Yeah, very impressive moves, starting with U.S. dollar, has me asking the question of whether or not this is the last gasp for USD, Brendan, or the start of a new range for this U.S. dollar. You can see we got up to the highs in small USD futures about a month or two ago, backed off those highs considerably, had me thinking that maybe we're going to get back into the meat of the last year's worth of range. Nope. Given the higher than expected inflation number, we have U.S. dollars climbing a lot higher here today. British pound getting punished, down 200 points below $1.25 there. Euros eyeing parity. We'll get to that in a second. I've got some short USD up here, Brendan, going against the trend a little bit, thinking that we might come back into this range. And I want to show people something that the Small Exchange puts out to their audience concerning our markets here in U.S. dollars, rates, and everything else. The start of the week, we project ranges, Brendan, given recent realized volatility in the market. And you can see on Monday, the week's range was 156 and change up to 160 and change. Right now, we're set to go out the week here in small U.S. dollar futures, $1 higher than this projected range, correlating to a move that, Brendan, occurs maybe 20% of the time, a little bit of an outlier here. That's why I'm getting on the other side of this stuff. But those of you who are looking to ride the trend could see some further action, especially if traders are eyeing that parity level in the euro that we've challenged a few times. And I'd like to show a little bit more historical data in the US dollar here. About 167 in SFX futures is going to correlate to a buck parity in euro USD. We tried to get up here a couple of times back, if you remember, in late 2016, early 2017, and then also at the outbreak of the pandemic for a couple of days there, a huge rally in US dollar. Both times they came off of these levels, didn't get to a dollar between euro and USD there. We'll see if this is the case again. I'm definitely on the higher probability side of these things, the historical side of these things going against today's trend. But I got to tell you, friend, it doesn't feel too good, especially given the fact that they have not given back any ground in US dollar here today. It looks like we're going to close out at those highs.
When we spoke on Monday, we were talking a little bit about the ECB. They came out this week, obviously didn't do anything for this month, but said coming in July, coming in August, they're going to go probably 50 basis points as well to correspond. I mean, after today, I saw a lot of people talking, oh, okay, well, what about 75 basis points? Maybe, the ECB does that. Maybe even, the Fed goes 75 basis points. We get the Fed next Wednesday.
Absolutely. And actually, that's a great call by you. And I'm glad that I was prepped for this, because if we throw to my share screen here by one of your wonderful producers over there at Trader TV, thank you very much. You'll see that these odds are shifting up to the moment. It wasn't just yesterday, Brendan, that it was 96% chance of a 50 basis point hike next Wednesday from the FOMC, not shifting by earth-shattering amounts, but we've gone down from there being a less than 4% chance of 75 bips next week to more than a 20% chance of 75 bips next week. And if we open lower in bond and note prices on Sunday night and Monday morning, higher in interest rate futures. These odds are going to continue to shift, continue to put pressure on the Fed to maybe hike by 75 basis points next week. And if they do so, Brendan, these interest rate futures are going to pop off, and the ZN futures, the ZT futures, those markets that are denominated in bond and note prices, those are going to sink. But right now, a really fair market, especially if we go to, let's take a look at the small 2-year yield futures that are not just like the US dollar getting back to those highs, but Brendan, clean through those highs. And actually, I put together this chart earlier today, and we weren't at 3%. We're fixing to close out today above 3% in 2-year yields. That correlates to $30 in the small 2-year yield futures here. 3% is finally here. Now, the question is it here to stay? And this is a nice piece as well. If we do dive into this week's projected range, you can see that the interest rate market, Brendan, took what happened in foreign exchange and they one-upped them. They're not only $1 higher than this week's projected range, they're more than $2 higher, a really huge outlier move. And by my calculations, a move that we see once or twice per year as 2-year rates are up more than 20 basis points today, above 3%. Big outliers all over the place, really pushing me to get into the rate environment. And you might guess that I'm short these short-term yields. And this goes back to, again, where I like to live. And I always tell people, if you're following trends, just be consistent with that. I go against trends, and I'm going to be consistent with that. And the last thing I have to show you here is this historical chart in 2-year yields. The last 5 years or so of data, you can see 3% is a huge number. It's the value that we got up to in the later part of 2018 and backed off all the way to the tune of almost 0% in yields by the time we get to the pandemic of early 2020. Now, I don't think that yields are going to back off to 0%. Of course, I don't hope for anything catastrophic to occur to bring rates all the way down there. But these are historical extremes that I've got to bring up, and I like to be on the other side of here, Brennan. But yeah, if the FOMC comes out on Wednesday of next week, they hike by 75 basis points. Man, my shorts are going to be feeling pretty poor.
Yeah, it's an exciting time, obviously. I mean, we talked a little bit about today throughout the show, even the 10-year, just wild today after the announcement as well. I mean, I think it was 318, 319 was the high, on the 10-year even, which is, it's been a long, long time. More to come, obviously, next week. Give us just one idea. I mean, you mentioned the short side of the short-term rates here. Going into the Fed, though, where is the trade here for everyone?
So I think my best bet here going into the Fed is leaning a little bit on the short side of those short-term rates. But this is one that worked for us a couple of months ago, Brendan, and I'm going back to the well for we're almost at inversion here when you're comparing short-term rates to long-term rates. I like being not only short the 2-year yields, but long either the 10s or the 30s. You've got a little bit of a hedge to your note there. Yes, 2 years are up 20 basis points. 10 years up 10 or 11 here today, so not too shabby. That creates, Brendan, a hedged position for me going into the FOMC. I'm not just one-sided, and if they come in and raise rates, I get my face ripped off. I at least have a hedge going in, and that's even higher probability because, of course, you can go back to the aughts and show me data. Hey, Frank, 2-year yields have been as high as 4, 5, 6%. And so that is a little bit lingering, a little bit scary. But no matter what the environment is, Brennan, we don't tend to hang in that inverted territory for very long. So I like the anti-inversion trade, short-term yields, long-term yields, as we are pretty nearly there, a rounding error off of inversion already here on Friday afternoon.
An impressive week, to say the least, when it comes to the U.S. dollar and treasuries. But maybe we'll touch on this Monday, maybe when we speak again. But I mean, crude oil as well today. Another very, very volatile session, back to 120, 120 and a half right now, heading into the weekend. Contract rollover as well to deal with heading into next week. So lots to cover into the new week. Frank Caberna is Director of Product Content and Creative over at the Small Exchange in Chicago. Sign up today, guys. Great information, as always, from the Small Exchange that they put out. So we appreciate your time, as always. Have a great weekend. Thanks, Brendan.
Yeah, big thanks, as always, to Frank. And I actually saw in the chat, one of the best compliments you can get, you come on here, is I heard some people saying how good at explaining Frank is. And I think that's one of the cool things is, sometimes I'll chew through something and someone will say, hey man, what do you mean by that? And I've been sitting here and on a trading floor, and you get accustomed to talking to people that are speaking the same language as you, and it's like, yeah, that wasn't very clear at all. But I feel like Frank always comes in here and makes it sound simple, things that are not altogether. And obviously, we talk about the higher time frame mattering in this market. I have a counter trend trade on. I had two of them. One I took off. The other one I'm leaving on here. I'll show you UVXY. I was short volatility here. As the market's trying to bounce, I ended up covering it. And this goes back to yesterday a little bit. I know it's a Friday, and we are having a little bit of a bounce, but that's how much I believe in this recovery or this little bounce that we're having here, that I'm immediately taking off UVXY. I'm actually just got on the offer. Actually, I'm going to adjust my orders here. I'm going to get on the offer in front of VWAP on Amazon, because as well as it managed to hold this random low at 109, I'm just not really convinced that we're truly going to break out today. And I'd rather be wrong about that and sort of leave that on the table than sort of have a repeat of yesterday where and there was a point on Tesla where I think I got a pretty good bounce there, and I was like, oh man, why be happy with a $5 winner on Tesla when look how low we are, this could go even more. And I ended up holding on to a third of it for what I can't come up with a really good reason for, except for the fact that I just saw how far it had come down. I had caught a bounce, and I just kind of thought it was going to go further, and all that ended up doing is costing me money. So I don't want to do that. I kind of want to think about just getting this out in front of VWAP. One more thing here, RDBX. I know you guys are watching this one pretty heavily, so I threw it in the chat. There was an offer, 50,000 share offer at $13.75. Then they walked it down to 55, and then down to 50. Now I don't see them on the offer, and I might, as I was just talking, maybe they got filled, maybe they pulled it, but that's part of the reason for this little bit of a pullback. So I backed off bidding 13s. Because I'd like to see it. Like if it can come all the way down into VWAP here, that's just going to give a better entry at like 75 to 80 to try to play this uptrend. It's got room to the upside, right? Oh, I just drone. The problem is if I draw lines on my chart and then on this chart flip away to another symbol, it gets rid of the line. So I just drawn some nice little cute lines for you guys to show you this level, like 14.5 on the daily chart. And then I had like this 16.5 level. And then up here I had 20 drawn out, just so you can see some of the upward bands that this could go to if it does take out the long. Oh, wow, now he's at 13. So he is still walking it down here on the offer. And I always have to do this. Like I have it linked, but I have it linked to one of my main trading ones. So they walked it down to 13 at 50,000 shares. I believe it's on EdgeX, so you'll only really see it when it comes up to the level 1. So that's an actual seller who has not had their order filled on Redbox, walking it down. Now, I don't think I've seen it on level 1 for more than a split second, so whether or not they're actually risking taking the fill is up for interpretation until I see it on level 1 and people actually hitting the order. To me, it might not be real, but either way, you're seeing the net effect of it. That's why I quickly threw it into the chat, because I'm watching it on level 2. I know people are long this thing. You have to watch out for that, because it may have done 60 million shares, but I showed you guys at level 2. It's 100 shares here, maybe 1,000 shares on a big level, and there he is now at 48,000, 46,000, starting to get filled at 13. There it is. Someone just took it in one shot, so it's finally gone through that 13 level. I mean, I'll take my shot now. There we go. And ultimately, I was probably going to be sitting on the bid, and I think what did I tell you guys? That I was probably going to sit on the bid around 13 or maybe like 13.20 or something like that. It's just a lot easier to make the same trade and wait for this person to get filled, because it's just driving it further down. So instead of chasing a little bit higher, now somebody just wagered a lot that was the right time to sell. You know what I mean? Like they were trying to sell from 75. And the way I would look at it is if it gets back up to that 75, there's always the chance they still feel the exact same way, and I would not want to fall into that. So I definitely want to scalp into that range. Probably consider it needing to take out the high, make some fresh highs, and then pull back, stop some more people out, maybe get a pullback there. To actually see some of those levels on the daily chart. But nice little pullback on RDBX, allowing us to get a little bit better of an entry point than we would have had just like 5 or 10 minutes ago.
Absolutely. RDBX, wow, what a mover for today. I remember the stock was mentioned yesterday in a super chat by, I believe, Nicole, talking about the huge short interest on Redbox. I believe it was 180% yesterday, probably went up a lot more today off of this move, but I think she was asking whether or not we believed it would be the next GME or AMC, and I think at the time we downplayed it a little bit, but wow, all I can say, Nicole, is what a call, up 40% today. Hope you made good money on that, because that was a really good idea you had, and I think this might continue into Monday morning depending on what happens later today. I think we're seeing a little bit of profit taking at the moment. I'm trying to average down onto my position over here. I think I entered a little bit too early at 1350, but I averaged down here into low 13s, trying to get back in. I think we just flushed a little bit all the way from 1320s down to 13 again. But who knows, we might see a little bit of profit taking later into the day, as this is a huge mover. Don't forget, this was a $2 stock not that long ago. I think it tried to make its first run and was got interrupted from news that CSSE's Chicken Soup for the Soul was trying to buy them out or some news like that. Unfortunately, didn't pay too much attention into it, but I remember it was down 50% on that day due to a low buyout offer, but looks like we're trying to pump around 2 over here, and pump we do, because this thing broke, I think, $14 today to the upside, now trying to fade a little bit to the downside. This thing now at $13. Trying to hold $13, I should say. I'm not sure if the buyers can kind of step in here just a little bit, but seeing a little bit of size coming in here. That large seller can kind of lay off a little bit. We might see just a little bit of support at this area, but we just broke 13. Unfortunately, not the best sign. But in other news, if you take a look at the indices, looks like markets are trying to recover a little bit towards the close right here. Unfortunately, I exited my trades a little bit too early. I saw we got rejected off of VWAP on the SPY, so I tried to get out a little bit there, a little bit here. I saw I broke through VWAP, re-entered the position here, and looks like we're now trying to go higher and higher. And today, it looks like we found that curvature on the daily low here. Looks like we're just trying to move upwards. Now we're close to daily lows here. Heading close, trying to recover just a little bit here. I saw somebody mention in the chat NVIDIA, whether or not we can take a look at that. I think tech stocks now recovering just a little bit. NVIDIA, I'm sure, follows. $171 over here. Let's see, at the moment, we're well off daily lows. I remember NVIDIA posted earnings not that long ago. I think it was below 160 in the post-market there, but made a nice recovery that day, unfortunately. Heading back down towards the downside, but not the worst close today, down 5%. In the grand scheme of things, I think NVIDIA is one of those growth stocks that probably would be one of the harder hit ones coming in to this market now that we're down over 50% from the all-time highs. Remember, NVIDIA was $150 or so before the 4-for-1 split, or 1-for-4 split, I should say, back in 2018. During this initial correction here, I guess it used to be 300 or so, fell by over half over here. I think this is the first time that Jay Powell was trying to initiate the I think they're trying to shrink the balance sheet, I believe, in late 2018, saying that the balance sheet was too big and we need to stop the bond purchases a little bit. So if you remember back in 2018, I think we had a bit of a market correction there. Apple was down 30%, and you can see NVIDIA down even more. Powell says since then changed course completely and decided to do QE all over again, and coronavirus was his excuse as to why. Of course, we've seen the consequences of that with today's CPI reading. But yeah, NVIDIA here, well due for the course. Down 50% from all-time highs here. NVIDIA, again, a leader in the GPU space nonetheless. I know AMD is coming in hot with the competition there, but nonetheless, NVIDIA, AMD, I'd say great investments for a long term, but valuation does in fact need a correction over here. NVIDIA is still almost a $500 billion company at $171. So great name at a discount, I think, but just be careful not to go in all at once, perhaps average in a little bit. That'd be my advice to play this name.
DCA, baby, dollar cost averaging, and that's one of the things that you got to get used to. Like, this is a valuation type year, like valuation reset, I should say. So you start thinking about like how far stock can come back in. Well, just keep looking at that P, because look, so many stocks are off of those highs by a lot, and the reality is, okay, so you've seen the price come back in, but guess what? What were we just talking about? The economy and maybe it's slowing down. There's another side to that equation, which obviously is the earnings themselves. what happens when you start adjusting the earnings back down? That's the other way for these things to come back in, which means if you think it's come down too far, well, wait to see what happens if you actually have earnings, both revisions in terms of estimates to the downside for forward PE, but same thing when we start missing and the numbers start getting bad. Now, I got out of Amazon. Remember I just said I don't trust this rally, so I'm out of Amazon. If it popped close to VWAP and failed, yeah, out at 111.50. 110.50, don't care, doesn't want to go, not going to fight it, not in this market. The only thing I'm angry about, though, the other thing I did do, and I said I was getting out of my UVXY short. Yeah, whatever. It looked like that was the right call at the time, get out of VWAP, because we've been range bound so long that I just wanted to sort of play the next trade. And then, obviously, what ends up happening is I get out and there was no bounce. Like, it goes range bound, bouncing off my 15 level. And then the second I get out, like, that's when it stops bouncing back into a re-entry. That's how it works, man. Like, the second you're convinced you're going to be able to play a range, you get out of your trade and the range is no longer there for you. So, yeah, I probably should stick out there. And Frank is asking me, why UVXY short rather than a SPY long? Everything just comes down to preference, right? Like, I'm sure, like, it's basically the same kind of trade. I get it, and I could literally just go long one of the reverses here for volatility. It's just, and I said this the last time too. UVXY is the one I have up. It's the one I've been watching. It's the one I've drawn my channels on. So when the market was basing out, I could look at my chart and be like, oh, I have a setup and I have an entry there. So I'm just going to execute it where I see it, as opposed to jumping into something else. And I understand it's kind of the same thing, but as a trader, you just do what works for you. Because if there's two ways to express a trade and they're effectively the same thing and there's not going to be a gigantic difference, then you might as well just do the one that you're more comfortable looking at. I mean, Sean talked about why he likes going TQQQ. Because when he's betting on the market, like, he just wants to be long when he's thinking long and not be in one of the reverse names. And it's just a psychological thing. You got to be comfortable. Brendo?
A little one moving here, guys. Not a lot of volume behind it, but chicken soup for the soul halted. Just reopened, in fact, after a volatility halt back to the upside. 6 million float on this. Not seeing any news yet, but a heads up. Halted and then reopened downside.
Okay.
CSSE, wow. This is a name that has moved in tandem with Redbox Entertainment, I believe, for the past couple of days. I remember there was news of a buyout between CSSE and RBDX or RDBX, but I didn't quite follow the news on that one. I believe the buyout offer was something close to like $3 per share, and it was partially in stock, if I can remember correctly, so that might have something to do with it. But yeah, RDBX, CSSE, I think moving together quite a bit here. CSSE today, high of 63. So yeah, well, interesting name over here. But again, I think if I remember, these guys publish books as well. I think I read a few of those novels back in the day of interesting stories. But yeah, fascinating today, up 11% for the day. And I think to what you were saying as well about valuations, and I've been seeing in the comments as well here, people are talking about how some of these tech names now have lower valuations, lower P levels, I should say. I know Bill here was saying that Apple, Google, Meta, Netflix have lower Ps than Coca-Cola, Pepsi, CL, and Procter & Gamble. No, that's exactly what I was saying as well. I think some of this tech rally has been oversold a little bit. There was a correction that was needed, but I think Facebook now at what's Facebook at the moment? I think it's trading something close to 13, 14 P ratio or something close to that. Facebook trading on NASDAQ, apologize, trying to get this thing up here, trading $196 on the day. Not too much of a correction here for Facebook, but sorry, I think it went by Meta now, formal name change. It's funny to look at. Let's see if I can try to get
you're not going to get, you won't get like historical data on it.
Not here? Okay,
chart,
let's try to type it in on TradingView over here. 177, yikes, okay, nowhere close to 196. That was before the move down in the past couple of days, but even so, taking a look over here, P ratio of 13, and I know we were talking about this before the earnings. They are in the middle of an interesting period, I should say, in terms of Snapchat's guidance, guiding lower in terms of digital advertising, hard-hitting Meta, Facebook on that news there. But at the moment, I do think these valuations are a lot lower. Again, Meta, I believe, had revenues exceeding $100 billion for 2021. Of that earnings, I think EBITDA of 46 billion, if I can recall correctly. But nonetheless, I think the question is, can Facebook continue to see those earnings later on? Yes, the P ratio is 13, but with the slowdown in consumer spending and advertising spending, what might happen to some of these names here. So I think that's the biggest problem, how earnings might affect some of their EPS ratios, and whether or not these EPS ratios can even be trusted for the moment, I should say. So I think in that reason, that'd be my guess as to why a lot of these consumer staples keep on holding on, because we know that no matter how far the market falls, no one's going to stop brushing your teeth or using hand soap. So that's my take on EPS ratios and tech firms.
So just a couple of things here. One of the reasons I love this community is because like we get to learn from each other. We get here we get a lot of different viewpoints, right? Like Tony comes in and always drops science, right? Like Sean and I, different traders, Prad, Ian, Brendan, Luca, all different perspectives. Arun, you get the futures, but you guys in the chat, and it was thrown out there, of course, that there was an offer from Chicken Soup from the Soul for Redbox. Now it's trading above that offer. So there is a connection to both of these. But on the topic of Redbox, I was talking about the size on the offer that was following it down. Now, on the bid, there was just somebody spoofing the bid with obviously fake orders at 13, which when I'm long, I absolutely never, you don't like seeing that. Like, you think to yourself, well, why wouldn't you like seeing bids in front of a level that you're long, sort of supporting your long trade? Well, when they're obviously fake, that just makes it worse if it flushes from there, in my opinion. So I don't want to see that. Like, that's the worst thing. I don't need, that's desperation when someone's trying to spoof it to the upside. So I just took more shares out for the small scalp, and then I tighten up my stop. I don't want to give it more room thinking it can go up. Now I just want to have it either pop from here with what I got left or even fall down there, guys. So that's one of those. I don't like seeing a spoofer out there if you're in the long side of the trade. It doesn't mean I'm reversing into the short. It's just I don't want to see it because I think that's not a good thing. We didn't halt to the downside on CSSE. It got close. It opened up and rejected, but it got close. It didn't actually halt. It's still trading, if you want to call it that, because there's not a heck of a lot of volume on it right now. So it's trading there. BIC S. What are you saying? You've got Tesla calls and Apple puts. I mean, obviously, you're not giving us a ton of detail. You're actually, okay. First of all, talking about Tesla, this daily chart, it's got this 1-3000 from when it's not split. It's just ridiculous. So I have to zoom in to be able to show you guys the daily chart. The thing about Tesla is it's not so much that we're in a downward channel. I mean, for those of you that are into this sort of thing, it actually put in a death cross when it made its low, rallied from that, and is heading back into the downside. It's got a few things weighing on it other than valuation, right? Okay, so EV space, good, great, because gas prices are going to the upside. They actually got a bit of an upgrade and some positive talk today as well. But they're getting punished for a couple of reasons that don't get talked about enough. One, maybe the Elon Twitter thing does get talked about. But the second one is getting out of that ESG bucket. They're getting punished by Wall Street for their weak ESG score. And I don't want to get into the politics of how nonsensical some of the ESG really is, environmental, social governance, to understand why Tesla cannot be on the S&Ps and XOM can be one of the highest ones there, because it's not exactly what you think it is, people. But the fact of the matter is big money is following it. So inflows are not going into Tesla that might normally be. And the reason I kind of think it's a bit of hogwash is because if you are betting on, say, you want to be positive for the environment, you might think Tesla's a good place to go. But anyways, that notwithstanding, that's one of the reasons why Tesla's been under pressure, and it has not been catching the kind of bid that you would expect on most days. Like the other day, like it was one of the strongest stocks in the market. Actually, was it yesterday? Yeah, it was yesterday. What am I talking about? And I was just like, oh my goodness, above 750, this is a jailbreak long. The market was weak and it just kept going. I'm like, yeah, baby, Tesla's breaking out. And it just, not only could it not hold it, despite being so strong in the morning, it just flushed and held no support levels. So there's not that rallying that comes into it. The buyers just aren't really there for Tesla, and there's a host of reasons for that. So I kind of feel like it has a lot of reason to head lower. And maybe we are talking about some of those levels like the 530, 580, 636 that were so good on the way up. Maybe those are levels that we have to start thinking about on the way down. But there's a lot weighing on Tesla right now, and it's not just the valuation. You got to look a little bit deeper than that.
Certainly so. Tesla, I remember a stronger name yesterday, but reversed the downside on the 2.5% move. From what I understand, some people, I think, mentioned in the comments, the individual said that he had a straddle position holding both calls and puts on Tesla over here at around, I think at the moment, we're trading close to 7 $100 flat. And I was taking a look at the implied volatility readings on Tesla options expiring next week, $28 for the call. And imagine there's going to be a parity on there as well. If I can, I'm not going to scroll through all this. I imagine there's going to be put call parity, both trading around $28. And so I guess what that means is if you're holding both a put and a call option, you're sort of implying a move $56 one way or the other, which I suppose makes a lot of sense given that the interest rate decision is going to be next Wednesday. That being said, I think we're pricing at above 92% as of yesterday, probably above 90, way above 92 after CPI reading was too hot today. So there's not really too much of a catalyst one way or the other for Tesla. So all I can say is be careful if you're holding that straddle in case this thing stays at $700 flat. I'm assuming you're holding $700 calls and puts or something like that. Yeah, the issue with holding a straddle is that in case you're wrong about the implied volatility, it'll really bite you. So just be careful about that, my friend. And yeah, I think that's the issue with options at the moment. It's that it is I can't quite say it's a seller's or a buyer's market, but obviously prices are inflated since implied volatility is inflated. I know implied volatility is naturally inflated since this is a seller's market due to the fact that interest rates are now higher. Sellers now command a higher implied volatility just by loaning out by having to put up the money before selling the options itself. So if you're a buyer, you have to really bank on implied volatility being high and I suppose the trade going your way in that regard. So just be careful on that because it's really hard to reposition from a pure straddle position, assuming that is what you're holding. But yeah, Tesla, bold move, I'd say at the moment. It's moving quite a bit in recent days. So I think a $56 move is very well possible by the end of next Friday. But yeah, just be careful on that trade over there. And I think with options, usually they end up decaying in the final days. So yeah, that's just my advice to you. Don't be scared to close it out early if you see the money coming your way.
No one ever went broke taking profits, man. I think that's, I always like using that line because it just feels like it makes the most sense. It's a simple way to put it. Like sometimes you don't want to react to seeing positive P&L in a blot or in a statement, but in this market being what it is, I don't think you can go wrong sort of banking it because there's enough uncertainty out there. I'm just noting a few things, but we're kind of very, very slowly grinding to the upside, and I'm kicking myself. I covered the long we had in Amazon. Winner's a winner, but UVXY should have held on to that short. I'm watching DocuSign just sort of catch this bid off 66. Like, look at it. And this, by the way, like where it is not random. Like, this is where it held at the open as well. So, it's kind of holding this 66 area. Looks like it could be a good entry point if I can maybe catch that. But there are a few levels that we can watch here to the upside. Revlon is really slowed down. I think that's a bit of a nothing burger at this point and definitely a disappointment. I thought there'd be way more action in the stock when they declare bankruptcy. NVIDIA down 5%, trying to claw its way up to VWAP. I don't see any great support levels, but that should be one to watch. Tesla is actually at 700, but I kind of feel like DocuSign's a place that I could go. Another one that we had some good levels on, or at least the good ideas for this morning. That it feels like it's asleep, but another one of these where we could get a bit of a break off a tight consolidation. NEO is starting to set up. But I just don't want to be rushing into anything at this particular point. Like the last trade that we got out of, because what did I tell you guys I would do? Start scalping and tighten the stop on RDBX because someone was messing around with it. Well, guess what? It's like, well, that's still just as good as it was before. So I kind of feel that overreacting to some of the tape here when we're in a chart, we're in like a channel, isn't the right way to go. Like the trend was still good. I could have given this one more room. I decided to go the other way and just sort of, as I said, bank the profit because you can't go wrong. But we're still creeping to that upside. And I want to find my way into something that is a long because at this point, it does feel like we want to try to go up. And I know it's been a downside market, but right now it's not looking like it did yesterday. You know what I mean? Like in this particular case, like we're kind of sustaining this bounce. Now we're at a bit of a decision point here, I do think, on the ES. So this could be when you look to see if we pull back, does something that we just pointed out, does it hold support? Does DocuSign hold 66? Does NEO hold that channel? Right? Like, can NVIDIA get to VWAP? Like, those are the questions I want to see answered. And then if they answer yes, you can go into the long. If something like a Tesla rejects 700 in that same vein, well, then, that's still on Revlon for some reason. If we reject 700, well, we put a wick high in. You can start thinking about shorting off of that level. But I think it's too early to make that call on some of these plays here. I think going to these small caps, which are moving, does make some sense. And I might not get that UVXY re-entry point, but On the off chance it gets up there, I would look to short it again.
Absolutely, and I just want to give a quick shout out to Common Sensible in the chat here, mentioning that consumer staples went green on the day, where the CPI rating was so hot. Now up just 0.14% on the day, not an awful lot, but wow, going green. This is in contrast to some of the other ETFs I was taking a look at. I know utility is also trying to push up towards green territory here, just down 0.1%. But you know, in comparison to some of the other ETFs over here, biotech, of course, you know my story with biotech, don't buy it, and I say that unironically. I learned my lesson, you know, holding biotech shares. This is down all the way from $173 to $67, same level as 2014, by the way, in case you guys were wondering. We were close to it, 2015 in January. But like I was saying, staples don't really take too much of a beating in such an environment, and the reason being, I think, as Neil was alluding to, earnings aren't really being shifted towards or being affected in such an environment, despite the fact that you know, consumers are spending less because they're not spending less on like the name mentioned, staple products, utilities as well. People got to keep their lights on. Near all-time highs, doesn't grow very well, but this is just a heavy dividend-paying sector, so it doesn't really get too much afflicted in such a market. I see a super chat here. Apple 140 calls June 17 expiry. What do you think? Thank you, Vic, again for the super chat. AAPL, it is currently at 138, so that's going to be an out-of-money call expiring in a week. Very bold play here. So, you know, when in my views, when you're holding such a short expiry option, I like to call coupon, and it's out of the money, you have to be you know, careful for what happens. Obviously, it's priced at a discount towards something that's deep in the money, but the risk is there, and so you should always be well aware of the possibility of Apple perhaps staying at 138 or going lower. I lost a tremendous amount of money buying out of money calls, you know, back when I first started trading. So if I can give anybody any words of advice, it's to you know, buy further out the money, sorry, not further out the money, but further to expiry options here. As for Apple 140, I'd say that's going to be very dependent on what happens with the Fed decision next week. That being said, you're going to be betting against the trend if you're holding calls at 140, seeing how much we've been moving towards the downside. That call with $8 worth of intrinsic value, or $800 option right there, now all the way down to zero in intrinsic value, now trading on just the time premium and whatever's left of the implied volatility. So, you know, with holding that call, it's not something I would personally do if I were trading. That being said, if markets were to reverse next week, thinking that the 6% move to the downside on the Qs was way overdone, I do think that Apple would be one leading the charge back to the upside, and so that's one that can easily go back into money. So, you know, with options, it's like, for me personally, if the only time I would buy options is for insurance. For instance, if you're holding a long position and you're heading into earnings and you're thinking that there's a real possibility this thing's going to pull a DocuSign on you, you might be holding some at-the-money puts in case you also believe that the market is underpricing the true volatility of what might happen. And on the flip side as well, if you're in a short position, perhaps you can buy some calls to hedge against that short, so you're not naked short. So, you know, if a GME were to happen and you're short, you'd have those calls to offset your losses. But that being said, be careful if you're just buying, you know, straight options there. You know, it can obviously move against you very fast. And just taking a quick look, I think people also mentioned in the chat, Redbox, you know, bouncing off support there, now trading above $13 once again. Quite well. As you guys can see, I tried a dollar cost average to this trade. Still out of the money here, but see if you can try to move towards 1340. I'd be one happy camper there. I think there's one other name, if I could remember, AERC as well. This was a name yesterday. I think I made a pretty terrible call. I think he would break $12 yesterday. Unfortunately, we got rejected right off of it. Looks really similar actually to what happened today. If I can just zoom in a little bit over here, where we try to test that, not quite close to 12, but I think 11.80, and we got rejected off the 5-minute candle there. Again, very harsh, but looks as though we're holding 11 for the moment, and so heading into power hour now, we got 38 minutes left. So this is going to be explosive, and I think volume is going to start curling up as we head into the close.
See, here's my thing, man. Like, I'm going to drop this one because it's the closest thing I have for the GOAT, for Tony. Like, coming in, answering your options questions, which really you're not going to get from Sean and myself, who are just 100% equity focused pretty much all the time, right? So you're going to get a little bit of that here today. On top of that, I actually spent a bunch of time, and I don't have a lot of free time at home because it's like, my daughter had gymnastics last night, and then this is like before I went to bed. I actually put some effort into thinking about some Tupac lyrics in a bar that I could drop where I could rearrange it so that I wouldn't be cursing or say something that gets us in trouble on YouTube. And despite all of that, despite Tony dropping knowledge here, we have like 574 likes, so we're not going to get to the 1,000. So I'm going to have to throw that one back into the ether, completely forget about it, because I was actually looking forward to it. And I'd probably mess it up in a mold man, but I thought you guys wanted to hear some bars. Apparently you don't. But if you take a second and hit the like and we get to 1,000, I promise you, I will drop some bars and we'll see if they're any good. That'll be up to you guys if you want to judge that. But as far as I'm concerned, you should just be doing it because the knowledge you're getting from Tony here. He just talked about Redbox. Heck, man, I just got back in at 13 because I just talked about how the trade wasn't invalidated because I was wasting my time on the size that was there, and we're headed right back into the upside. So let's go. Even Tony likes the Redbox long, for crying out loud. By the way, I know you guys will see, it shows like the Sean Apple position. I don't know, obviously Sean's not here, so that's just one of those, probably the last execution he had. That's the only, but it's not Tony's position. He's not in Apple. Brendan, what do you got, bud?
Worth noting, guys, on Revlon, Wall Street Journal now reporting that this could come as soon as next week. So initially, this report was just on social media that they were getting ready to file for bankruptcy, but Wall Street Journal now saying next week.
Okay, so a couple of things. A, good job, everybody. I really, really better not curse. And the thing about Pac is he doesn't actually have a lot of clean songs. I didn't listen to radio versions. I had the albums. I wasn't listening to the radio versions. You don't memorize those when you're a kid. So anyways, we're 966. So obviously that's going to happen. Thank you guys so much for that. And now all of a sudden the pressure's on. It's like I sit in front of a camera all day and you get used to that. However, trying to drop an entire bar is not the easiest thing in the world. But thank you guys for putting the pressure on me there. Now I'm actually starting to get a little bit, and I'll probably do it towards the end of the show. I mean, I don't want to get in the way of the imbalance is starting to come out, guys. I'll pick a more opportune spot to do it. Oh, you guys kill me. The market is trying to bounce here as I change the subject so that I don't freak myself out that this actually might happen. So the NASDAQ is making. We'll show you the NASDAQ because I was talking to ES breaking the channel. And I don't want to ignore, and by the way, I'm on the front contract, the U contract. This morning, I know I showed the M contract. It's Friday. Both of them do the same amount of volume, but I'm now on the front one because Arun always busts my you-know-what for not doing that. So 12,000 is sitting right here. And that was some trouble yesterday, if you remember, when we broke through that. So we need to chew through this 12,000 level for some of these longs to work. But I'll tell you this much. You ain't got to chew through anything for Redbox to work. That is now bouncing to the upside. Now, do I still think at 1375 we could run into some trouble because there was a seller there before that walked it down? Yes. So will I take some profit when we get 25, then 50, and then try to hold for the top? Absolutely, we will. But Redbox is going. It's one of the strongest things out there, guys, and that's all we really care about. You got to find yourself a bit of a long, and I don't love too much of anything in the market. I talked about NEO. Sorry, that follows the market, I should say. I talked a little bit about NEO breaking its channel. That doing anything? Oh, goodness, no. Absolutely not. NVIDIA, did that get through VWAP? I mean, it's just barely breaking through right now. So when we get through that, if we get through that 12,000 number, you could at least have NVIDIA through VWAP. I don't think NEO's making the break. Tesla's above 700. That could be a little something. Microsoft, by the way, look at the channel on Softy. Look at it hold 54 and now try to break out. This is definitely, there's something here. This is a little something for Microsoft. Maybe we could be thinking about buying some dips in Softy. And the one that we should have done, and trust me, if Sean was here, here's the thing. I've known Sean for a long time. If Sean was here, he would have been long AMD probably 100 times today off of this 95 level. Now, I was watching a lot of other names this afternoon. AMD not always the front of my radar. But look at this 95 this entire afternoon. And we haven't broken out because we haven't taken out VWAP, but let's just say that's a pretty interesting channel. And if it's above 95, I think you want some longs in AMD. We're headed to the upside, guys. It looks like there's a chance we get a bit of a breakout this afternoon.
Yes, sir. Headed to the upside is indeed right. Market seems to be curling back up. Redbox, one that is really popping off. I say thank you to all the chat. Thank you so much for all the support, all the likes. I saw somebody was saying Neil Pack dropped that those bars for us maybe later today, but I know Sean might appreciate it a lot as well.
Well,
so you
we're at
could probably
1,000 now, so it's happening.
It's happening. All right, I look forward to that. Wow, it's going to be a pleasure for me. But yeah, no, I think market's liking it too, seeing that they rallied on your announcement over there. Glad I didn't get out. The S&P, the Qs, I believe, breaking down above VWAP, trying to end on a nicer note for a day after a pretty red week here. Redbox as well, 1337. I think pulling back just a little bit on the 5-minute candle. Taking a look at the 1-minute candle. Very nice bounce off of 1270 here. Now 70 cents from the recent lows. I'm still in positions here, as you can see. Dollar cost averaging. It's good if you do it, with an uptrend, I'd say, and that's always what you kind of want to see. Dollar cost averaging into a downtrend. That's just going to cause misery, as I've seen a lot of in recent times with the bio plays, but I think I've just been going on and on about that. Nonetheless, I think Q is now down less than 3% now, only down 2 2/3, heading again nicely into the weekend. See if we can try to hold this level over here. Revlon, as Brendan was talking about, Wall Street Journal reporting that they are entering into bankruptcy talks perhaps as early as next week, and as a result here, you can see consolidating close to $2. I'd imagine this would gap down further and just continue to converge until it reaches zero when the stocks eventually become delisted. This company does not have a lot of assets. Their balance sheet looks awful, hence the bankruptcy, unable to secure any further financing, holding about, I think, just over $100 million in cash. So there are concerns as well as to its operations. Perhaps that's why I decided to voluntarily fall for Chapter 11 a bit earlier. But yeah, $2 here. We've seen what happened to a lot of other stocks. I think Toledo Biosciences now delisted. I don't know if I can pull that chart up, but as it was, stock fell from $1.50 to something like 20 cents after the company voluntarily disbanded on the, I think, the board's decision that the drug that they were working on would not do too well. That being said, when it was like 20 cents, before it was about to delist, I think that stock squeezed like 200% off of shorts covering. So you might see a bit of a bounce there on Revlon as well heading into next week, and as some of these calendar dates start getting posted soon about when their stock might get delisted. But yeah, Redbox here, I think we're fading just a little bit, but initially I was saying we might pull back a little bit from all the people making profit this week, but then I thought about it again when Nicole said about the high short interest, now perhaps close to probably a lot over now, $200, $200 when I say 200% short interest. And so those shorts probably have to cover into the weekend as well. You don't want a huge gap against you Monday morning. That wouldn't be a good way to start the week. So I think at the moment we should see more volatility heading into the close on a name like Redbox. But then again, this is up 40% on the day, so it did make a nice move there. Nonetheless, I might try to start closing my position now. Now that we seem to have gotten rejected off, I think the 1350 level. But yeah, going back to some of these names, just thank you so much for all the comments here I'm seeing being posted in the chat. I know you guys are going to drop us some nice bars momentarily, so I look forward to that, and I know you guys do as well.
I should have put you on I should have said you were going to do it.
I'm going to do it. I don't know if I have any bars on top of my head. I can
yeah, but Tony, you can do anything, man.
No, I can ring the bell.
Tony can do anything. Look, man, it's a lot of fun doing it, and I was actually, just sort of saying, like, I was actually talking to like both Arun in the chat here, and what I love about it is just it's so refreshing sometimes to get these different perspectives, and like we're both looking at RDBX and sort of trading a different way, but I think both can work out. I just want to know, like, I really thought we were breaking out here, and I'm going to go back to AMD. Like, give me a break, AMD. Get to VWAP and reject. Why do we, like, every single time you think we're breaking out, we reject these levels? Now, Microsoft, however, which looked a little bit stronger, man, these wicks on the chart are annoying. I have to zoom way in to get rid of that wick, because cleaning it up sometimes messes up the chart. This is a single 3-minute candle from that 54 half to 56. So I think if we hold 55, that's what I like on Softy. So, I'm thinking 55 Softy. I'm thinking 95. I'm not going to stay away from it. Redbox is still continuing to work. Not a heck of a lot moving, but I'll tell you what's really not going the way you'd want it to if you're long Revlon. If you're long Revlon, I don't know what to tell you. But it is heading down toward the low. I did try that the open trade, right away, this thing opened above 250, and we're kind of, sort of talking about the whole bear market thing, and Tony was going, and I'm not interrupting at that moment, but I did put it in the chat. Like, I got into the long, there was no bid. Like, at 50, there was like a few bids at 50 and 51, but there was really almost nothing behind it, so it's like, no, get out of that. It did try to go again. Now, the company that's declaring bankruptcy is heading to the low of the day. So, big surprise there. Revlon down 50%. Sometimes when you have a stock that holds down multiple times or puts in this kind of a wipeout bottom, there is a chance for like a good, quick little scalp, like 10, 15% there. So you buy like 52s or 53s, thinking I'll stop out and maybe lose 5 to 10 cents, and it can get up to like $75 to $3 on one push, and then you just get the heck out of Dodge. Obviously, that's not going to have worked out, but I've seen it work in the past enough that I had some confidence with it. As I was sort of sitting there messing around like, oh yeah, why not Nvidia, Microsoft, AMD, all these things that I couldn't get into, it's always the one you get away from or you don't trade. Simple thing, DocuSign, which was at that channel at 66, right? Like I went over and threw a bid on AMD that's probably not going to come back to 95. But DocuSign does get that bounce off 66. And as weird as it sounds, like this has been a stock that is giving you some pretty simplistic trades to the long side. I just wish I'd put that one on. Obviously, Redbox, looking at Revlon, talking about all this, in my head, thinking about having to not screw up these bars is kind of occupying my mind a little bit. But yeah, you got to have that trade. Got to have that 66. I'll pop on the bid just in case we get it again. But at this particular point, we're now 3:35, so 15 minutes, 2 imbalances, less than half an hour to go till we get the end of the week. And it is Friday, right? So if we're not going to sustain this breakout, I don't want any of these breaking support. There's no averaging into it. There's no, oh yeah, I'm going to try this like 3 or 4 times. No. Like if AMD comes down and bites me at 95 and breaks 95, I'm not going to try it again. I'm not going to reload at 94. It's just the market has been holding up and grinding to the upside. So trying to scalp at this point when we're kind of range bound is the only trade left. And if you're doing a scalp trade or you're looking to play inside of a range, the worst thing you can do is pay up. Right? Like you get complacent. It's like, oh man, look, I just missed this dollar in AMD. Oh, but it's bouncing. Let's just pay up and go long 95.50. Well, guess what? If you do that, then you're just going to take more shares at 95.30, and then you're going to take more shares at 95.10, and then you're just going to lose more money than you would when 95 breaks, if 95 breaks. But if you only get your fill at 95.10, 95.15, or 21, or whatever the heck it is that you want, then you've managed your risk successfully. So don't extend yourself too far away from the levels that you like. Netflix, which was a short for me. Yeah, I should have short this maybe again. I just saw like it's a Varsha. Varsha just asking about 180 about Netflix. Well, outside of this crazy wick that didn't happen, you see on the chart. Yeah, like I was using this all day long, and the only reason I probably am the only reason I'm not in this short is because the market started grinding up, and I was actually thinking about going into those longs. The reason I wouldn't have shorted, say, like AMD or whatnot, it's just I'd prefer a level that is a little bit better than just holding for the last hour or two on the top side when the market's been grinding higher. As opposed to Netflix, I mean, that 185 has effectively been holding all day long. Like that's a much different, like it's, okay, on top of that, Netflix gapped to the downside and caught a downgrade. And then it held a resistance point all day long. That's a much different short than going over to AMD, which caught a bunch of upgrades today. And what's been holding? On a stock that wiped out to the downside, it's been holding this 95 pretty well. It's got some lower highs in there, but playing off of VWAP, I don't like shorting VWAP. Like VWAP is solid for a place to, in my opinion, and I could be whatever, it's just my opinion. VWAP is a good place to cover trades for profit. It's a good place, I think, to reload in a trend. Like if a stock is trending up, I don't mind buying a VWAP dip or around a VWAP dip. But I'm never wanting to stop out at VWAP, and I'm never wanting to get in at VWAP or short off VWAP if I think it's coming up. So to me, that's not usually enough. I want another reason to do so. Like if you pile on like a 50 period or a downward trend and I wanted to short off of it because that trend, or I had a bias on AMD, different story. But my bias actually wasn't to the short side. It was this support level at 95. That's my thesis. Now, if we break out of here and hold above 96.5, then you can start thinking about, okay, hold that back into 96 for a breakout style trade. So, I don't mind that kind of a play. Of course, the one thing I'm in, Redbox, looks like it is going to be heading back into the downside. That's unfortunate. It felt like it was really going to go this time. I thought we almost get that 1360 fill. So we'll see what happens. And if we get through VWAP, I don't want to get too stubborn about this. If it holds 1250, I think that's great. If it doesn't, we'll just have to walk away from it. Tesla is, there we go, Tesla's going. That's a little something here. Tesla above 700, trying to break out itself. I actually thought if we pull back in, Tesla was going to be something we could use for weakness below 700 because that's a great psychological level. Turns out Tesla might be trying to make a bit of a break here, Tony.
Well, yes, I think so. And speaking of breaks, by the way, I got to say, amazing Netflix trades I saw on your chart there. I think you shorted pretty much every time I try to test that VWAP or that level resistance you're talking about. So as Neil was saying, it reminds me of the song Vici, levels. You got to know when to trade them, and you got to trade them at your levels. So, I think really good analysis there. Thank you so much for sharing all that transparency. I think I learned a thing or two right there when you're describing your trades. But speaking of also breakouts, I was seeing mentioned in chat, AERC testing 12. Unfortunately, didn't quite break through it. I know a lot of bulls were talking about breaking through this level, and this is the level we got rejected at yesterday and again today, I believe, towards the beginning of the show. And so, I'm with the bulls here. I think yesterday I made a pretty bad call. I'd say if this breaks 12 and holds it for just like a pretty bit, if we test like 1205 or something like that, this might actually take off closer to 15. And so I saw people talking about, how Tony said I might go to 15. It's like, I'll take this trade. And then, it broke to like 1205 or 1207, and immediately it got flushed to the downside back to, I think 11, or broke through 11 back towards 12, for 10, I should say. So hopefully it doesn't happen again. I apologize personally to anybody that took any of that trade I recommended there. I'm not the best at trading these daily movers, as many of you guys probably already know. I think I like to stick with indices a little bit more, have a little bit more consistency on larger names as well. But also on the topic of larger names, I know last time I think when I filled in for you, one stock that we talked about a lot was IBM, International Business Machine, whereas Sean likes to call it international buyback machines, because these guys, all they do is issue 5% dividends and continue to buy back shares. They're just a cash machine, and they don't stop investing in themselves or their shareholders. And this is a name that's been holding up tremendously well, even as a tech company during the market slowdown. They're a very well-established company. I think these guys were the guys that made SQL Server. So me, as an aspiring data analyst, I'd like to thank Mr. Cod, former employee at IBM, with the creation of relational databases there. But these guys are huge back in the 70s, the 80s. Unfortunately, in more recent times, have not been doing awfully well. Speaking of levels, I'd say this is one that has very, very consistent levels, trading in the low $100 range for the past couple of years. Yes, IBM is one. I believe we talked about IBM last time and likened it to a person. Mitt Romney said before, corporations are people. I didn't really understand him for a while there, but now I kind of see where he's coming from. I think if IBM was a person, this would be a 40-year-old man with a nice stable income, contributing to his 401k, issuing dividends, doing buybacks, very financially stable person. So doing quite well during a recession, not at risk of losing his job, very skilled individual. However, then unfortunately, you have small cap names, especially a lot of SPAC names. If you think something like we were talking about, what was it yesterday? A lot of these names falling quite a bit here. I think Carvana is one name that's fallen a lot here, 96%. But if you really want to leverage Carvana, then you got Room, which was, I believe, a hot name talked about here. So, these names here, I think Carvana would be more likened to a grad student. Doesn't quite have a job, a bit younger in his or her career, but not quite a very good cash flow coming in here. Probably needs some subsidies coming from the government or his or her parents there to fund a grad school. So promising future, but unfortunately not the best position to be during a recession. So you end up having some of these names, Carvana down 95, 96% from the highs. And obviously Carvana is not alone here. Take any growth stock, Rivian, Tesla doing better than a few names, Shopify. The entire Canadian tech sector is essentially this name over here. And we're down 75, 80% from the highs. Unfortunately not doing too well over here. But
it
yeah,
is our tech sector.
It is. This is our only tech stock, pretty much. Well, actually, I think that's heretical or something, because BlackBerry is another name that I believe we talked about last week on the show. But this is a fall from great stock as well. A meme stock pumped back in 2021, now fading quite a bit here. But point being is, in terms of surviving recessions, names such as IBM will always be here forever. I think these names are just what you kind of want to rotate into if you're concerned that some of these names will be going lower. I think people are talking a little bit about AERC again over in the chat. I will go through that real quick. Wow, okay, amazing. Pumping towards $13 now. Finally happened. Congratulations to the bulls. We finally saw it happen. I think a good 18 minutes until the close. A little bit of redemption for me saves me a little bit of face when I said it would pump to 15. So thank you, bulls, and congratulations, bulls, for the nice rally over there. Broke well through 12 and much needed. Third time's the charm. But yeah, how are your trades doing?
Yeah, we'll see. We'll see what RBX do. But that ARC, that's a strong one. We've seen that move before, obviously. And someone asked in the chat, like, why can't we show Tony's trades? It's just a matter of being coded into the system. Like right now, it's set up for myself, Sean. When Arun steps in, it's coded for him. It's just something we have to fix on the back end. There is work that takes into it, guys, and that's why in the midday show, like, you don't see yet Trader Prad, Ian, Luca. You will see it eventually. Trust me, we are working on it. It's just, it's one of those things that hasn't been done yet. I can't believe we've forgotten about this, but remember, Didi is being delisted today. So with about 6 minutes to go till the imbalances come out, remember there was a gigantic sell imbalance a few days ago on Didi, 55 million shares to sell. Well, guess what? There's no more Didi on the NYSE tomorrow. We don't know where they're going to list next, but it ain't going to be here. So you got to watch out for this thing when 350 hits. Now, obviously, you could see nothing. I don't know. Like, there might not. Maybe there's no sell imbalance. But if there is a big sell imbalance, well, A, I'm going to let you know. B, I've already sort of set it up. I have to pay for shorts on the thing, so I have it set up to go pay for the locates. I don't want to pay for locates because I'm cheap unless there is a big sell imbalance. I'm actually going to wait for it to come out, and then I'm going to check to see if there's a chance for it. But I just got into DocuSign, so I have to get over to that one because I did. I sort of started this off when looking for these bottom pick ideas. I'm going to cancel my AMD because now we're too close to the close there. I don't need that one in. But that 66 level on DocuSign just came in. We'll see if it can hold. But now the futures want to come back down. So I said there is no chance that I want to take multiple shots at any of these types of levels. So if we break it, I'm out. Even RDBX is starting to come back down here. So the market wants to flush. I don't want to fight it. We did go for the scalp trade on Redbox. At least both times, we were able to get a little something. I thought the second time was going to be a charm, but now you are seeing a test VWAP. So it's looking like we are going to start breaking downside. The futures have given up the ghost. We're down 2%, but remember, we're grinding higher this entire time. We're doing the afternoon show, and unfortunately, it doesn't look like we're going to be continuing. Everything seems to be cracking lower. Oddly enough, with the notable exception of Didi, which is inching higher, which, hey, if you're looking for a short at the close, that just gives you a more attractive price to potentially get a short, if there is a sell imbalance. I don't want any part of it if it's a nothing burger.
Yes, P. Didi, I guess P. Diddy, as I like to call it. Interesting stock, holding well into the close. But yeah, I think people are talking about AERC, lots of love in the chat, squeezing, I think rejected off of the 1360, unfortunately. But still holding 13 quite well. I think bulls have won this one up 45% on the day, fitting just a little bit here on the 1 minute candles. But overall, very, very nice rally. Congratulations to everybody that held. I think we see a little bit of profit taking now heading towards the close, but I guess this will be well warranted. Quite a nice rally. This was a $2 stock, I think, just a couple weeks ago. So, this was a massive, massive rally heading into the close. And Didi, I think that's one I want to take a look at. I believe it was listed on New York. No longer going to be listed on New York as of I guess next week, as you were talking about. So this stock is actually flat on the day, surprisingly. A little bit of buying coming in the past couple of minute candles. This will be very, very sensitive to the news, I'd say, on the imbalances, as you were alluding to over there. Numbers coming out in a couple of minutes. I'll make sure Neil is the one to talk about that. I don't quite have them pulled up on my screen over here. But yeah, wow, Didi is going to be an interesting name to take a look at. I think there should be some selling pressure coming to close. That would be my guess. But again, you do have a lot of shorts that might have to cover their short positions as well. Be a lot harder for them to cover on the Hong Kong exchange. I don't even think most brokers would let you access Hong Kong. So it'll be interesting. See, the longs have to exit, as do the shorts. So we might just see it sort of balance out. Besides that, looks like indices broke now below VWAP. Unfortunately, bad trades for me on the day. These longs didn't quite work out. Sometimes you try to diamond hands. You see the profit, you don't want to take it. But sometimes you regret it when you take profit too early. But sometimes you regret not taking profit at all, as is with my case here. The SPY's now moving down 2.5% Qs. I thought it'd be a nice recovery towards the end of the day, but now moving towards 3.5% down. I do believe this should be a gap where coming into Monday pre-markets. The pre-market session on Monday, or futures open on Sunday afternoon if you're in Eastern Standard Time. Nasty week for the indices here. I think the imbalance would point towards more selling pressure into the close, and it's just me taking a look at these watch lists every day. You wake up, you take a look at this, and you kind of wish you hadn't woke up because your portfolio is just down every day, except for obviously you're holding staples, down 1/10% today, and utilities not really moving an awful lot. But gold's up today on the stronger U.S. dollar, surprisingly. I know, I think Frank was talking about dollar strength here, and I think dollar is now moving much higher. Dollar index up 1% on the day. You'd be surprised or I'd be surprised before, I look further into it. You think higher inflation means depreciated dollar, but not against the other currencies, as this alludes to the higher possibility of Jay Powell raising interest rates further down the line. I think he was alluding to the 50 basis point raise twice over the summer as possibly, hopefully being the end of it after taking a look at CPI, but CPI clearly says otherwise. So U.S. dollar, a lot of support. Sooner or later, if we see interest rates continue to rise, the carry trade might just be dollar yen. Getting paid to hold the dollar and getting paid to short the yen. So, this could be an interesting trade for Forex traders out there. Yeah, Bitcoin, I guess, also not a very nice day following U.S. equity markets. Honestly, Bitcoin's been holding a lot better than a lot of tech stocks, as I would have expected. Similar to a lot of altcoins not doing so well compared to Bitcoin. I think Litecoin is my favorite one of the earlier ones I got into. Now trading at $56, a long fall from close to $500 or just over $400 back in May of last year. So cryptocurrencies,
got support, Tony.
It has got support, and I'll be part of that support if it moves any lower.
Boom.
So
that's what I like to hear.
I'm not sure if you're holding any cryptocurrencies in your portfolio.
I've always been pretty simple. I think when you look back to imbalances in a second, I'll do it quickly.
Oh, yeah.
I'm just a Bitcoin Ethereum, and it's really one of those. I can't pick a winner. I'm not smart enough to do so. So there's a lot of projects out there. Solana's had some outages. It's just trying to figure out who's going to survive. You want to have the AOL. You don't know. You don't really know when we see the next iteration or evolution, what's going to come next, or what is going to be the winner or loser. And I'm not really smart enough to pick that out. I just kind of figure go with the big boys and sort of stick to it. I'm going to go to the imbalances in just a quick second. We have about 15 seconds to go. My eyeballs will be on Didi specifically because, like I said, they are getting that delist, so maybe we get a sell imbalance here, but I'll have them up in just about 5 seconds. It is anticipated to be a sell. The early look is about just under a billion shares. There we go. Didi, whoa, that's not what you would expect. Didi is a 5.6 million share buy. So
wow.
My hands are they're not even close to the keyboard. Yeah, better not be short in that. YMM is a sell, 3.3 billion shares there. XOM, 1.3 million shares to sell. I'm not seeing a lot of big names in here. Apple, 9 million shares to sell. It is overall to the sell side when I'm looking at the big cap names here. Open Door, that doesn't matter as much. There's not, Ford, 600,000. Pinduoduo, 600,000 is not a small number. Overall, if I'm looking at the big cap names, they are to that sell side for the most part, but you've got a few small buys in there. Notably, so on its last trading day, Didi is a huge buy imbalance. Okay, I absolutely did not see that coming, but I now have no positions on. I tried DocuSign, that stopped out. Oh, by the way, I did use the last little push on RDBX to get flat. So, you have to give it up at some point. It did make this bounce. Now remember, Tony, Sean, myself, any of us, we're trading on a prop floor called it's Daytrade the World, which means we're day trading. So we have to be flat, no positions by the end of the day. So it doesn't really matter if I think Redbox has support here and has held $12 and has another leg to the upside as long as it's above 12. That's pretty irrelevant for today's trade because if it doesn't go now, it just doesn't really do anything for me. But on the other hand, now I'm never a believer in holding these kinds of things over the weekend. But like I said, it has held a good 12 support, which by the way is above its breakout price, and it does have a little bit more room to the upside for the move. It just doesn't seem like that is going to happen today, unfortunately. But yeah, I'm disappointed. I'm glad I didn't pay for the shorts on Didi because I'd have nothing to do with them, and it would just be a sunk cost. So that's why you wait for anybody else on the floor that might have paid for their Didi shorts already. You could have just got them at 12. Now, whatever.
Buy number is a scam, bro.
Look, it probably is a scam, and it might flip. But guess what? I can make that call at 355 or 357, Brad.
Buy number is a scam.
No, it's probably going to pair off. We saw it 55. We saw it 55 million to sell last week. So 5 million isn't that gigantic of a bid. However, it's still a bit of a bid. And right now, it did not exactly pop off of that number. So the market is telling you that they don't think it's real either.
Yeah, exactly. Price action, as to what Brad was saying, kind of supports his thesis. I think it was around 236. prior to the imbalance number coming out, and now despite the huge imbalance towards the upside, we have seen the price, I think, tick a few cents lower. So that very much might get paired out. And I see a lot of people here talking about AERC as well. I just want to give a quick shout out to everyone talking about it in the chat. I saw we just, I think someone announced we hit 309K subs. So thank you guys so much for, again, all the support. So you guys are tremendous, and we have the best audience over here. Can only very grateful for all your support. I see AERC again mentioned by some of you guys here, just getting a lot of love. Wonder if we're moving higher, and we kind of are, I believe, taking a look at the 1 minute candles. We try to push a little bit higher again, testing high of days, 1360 now, moving a bit lower, trying to hold the 13 level into the close. Redbox selling off just a little bit. It was a huge runner, I think up 600, 650% from the actual bottom there. I mean, this was 2 weeks ago, it was at $2, I believe, and now it's over at 1350, I believe, for a time. I think my average is actually closer to 1350. So I'm in a little bit of trouble on that trade, seeing that I'm not going to be holding that overnight. But before I pass to Brendan real quick, just want to also give a quick shout out to moderator here, Bears vs. Bulls. Thank you so much for just all the support you've been giving us, and responding to all the questions in chat and all that. You're the best moderator ever. But yeah, we'll pass it over to Brendan.
Just quickly, guys, little one moving here. Maverick Metals, which is on the NYSE ARC exchange, MMX. Big pop here on volume. Not seeing any news on this, but big move up here for MMX.
Wow. Look, this late in the session, obviously not something that I would typically trade because we have to be flat by the end of the day. But yeah, it's the other side of that coin is like Brendan said, he doesn't see any news, and a late day spike like that. When I didn't, it's not on the imbalance locator, so I don't think that's what caused it. I just would never want to be trading something like that blind. With 5 minutes to go in the session, random spike. That's why we appreciate Brendan, because it's, maybe you could probably find some random rumor or something on Twitter, but who knows? It's about getting confirmed and understanding what's going on. But that is a monster spike, so it might go on like a watch list just to check back in on Monday, or even just watch it into the close. And I just remind everybody, in Bears versus Bulls, yeah, you're right. You want to be stoked about it? We'll see. I'll do my absolute best, because I promise you guys I drop some bars. But if you don't stick around till 4, you're not going to get a chance to see it. There is a chance that Didi flips. The market is coming back in here. It wasn't just, they weren't big sell imbalances, right? It was very small. Like a couple of bigger names were under 1 million shares there, like Apple, but it looks like we're selling off anyways, unfortunately. So it looks like, yeah, Didi just flipped to a small sell. 2.7 million to sell on Didi now. So that flipped southbound. Looks like it is going to start selling off there. So, oh yeah, look at that move, guys. That's the push. Everyone just said it was fake. I'll go ahead and pay for some shorts on the off chance that I actually make this trade going into the close. No guaranteed. But yeah, Didi now starting to fall off. It's only 2.7 million shares to sell into 100 million. So that is not a lot, but it is still a significant imbalance. And the price action tells the story, right? It came out as a buy. They didn't move it to the upside. It fades anyways. The market is also coming to the downside as well. And what time did it flip? 3:55. That was the exact time that we got that flip. Big updates on the net order imbalance in New York tend to come in at 3:55 and 3:58. So those are 2 times. If you're kind of watching the overall market, you're in directional trades because of the imbalance or whatever it might be, just watch out for reverses at 55 and 58. Pretty commonplace to see those 2 times be significant.
Absolutely. Imbalance is always something fascinating to look at, how they flip at the last moment. I remember the Shopify trade not too long ago was probably the trade of the day for many people. It was an imbalance number that $80, I think, was it the $80 print towards the upside there on a huge imbalance into the close. So it's you always got to be careful with some of these names. Didi, I think, completely flipped. You want to be trading the trend. So I don't know about going long here into the close, but this might sell even further, seeing that a lot of longs probably need to exit their position. I was saying shorts probably need to exit their position too, so it'll cause a little bit of buying. But overall, I'm sure there's a lot of holders here who will probably not be able to trade it once it delists and trades on Hong Kong as well. So Didi, always interesting here. And we have about 4 minutes left in the regular trading session. So this is going to be an explosive name to watch. But besides that, I kind of threw it to you a bit too late previously, right before the imbalances, but I totally agree with everything you're saying about the cryptocurrency trades. You always have to separate the wheat from the chaff, and I think most of these projects are not going to be around during the next cycle. So Bitcoin, Ethereum, 2 big names that I'm sure will be around for a long time. Very established, dominant names as well. So if
you know what it's like? It's by the way, you're right, Fred. It just got really cold in here. It's like There's like a vent that's like blowing down, and I'm in short sleeves, so I got goosebumps. It's getting a little bit chilly on the floor. But no, you're absolutely right about that. And there's the correlation you could make is when there's a crowded space, like EVs are getting crowded too. Like good luck picking the winners out of some of these. Now, if you want to tell me Tesla is going to be around and is going to be selling it, have a large market share of the EV space, yeah, I believe that. But, I mean, as far as guessing, Fisker, Rivian, Ocean, blah, 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 NIO, XPeng, BYD, I mean, there's so many out there, and they can't all win. Like, that's the reality. Like, you're not, like, just look at the auto industry right now. Do you really think we're going to have this many names trying to participate in doing so on a large scale? But people are betting as if that is a distinct possibility for a lot of them, and it's just getting crowded. And when you have a crowded space, winners and losers get picked out. Sometimes consolidation is a good thing. I think, and we're going to probably see a little bit of that in the next couple of years. There's just way too many tokens out there, man. Like there's way too many tokens, way too many projects. There's no way that we don't actually see some more pain until we get a little bit of consolidation and separate the wheat from the chaff, like you said. That's a great line there, Tony. Coming back to Didi, it just respected the range about as perfectly as you could imagine. So on that little buy and bounce, it held 236, which was the previous lower high, and then it flipped to a sell, and then it held 226. So like that scalp trade, I wouldn't be surprised if that was your shot right there, to just sort of sit in it, let it flip, and then take 8 to 10 cents on that trade, because it's not getting much bigger. It's still a 3 million share sell and bounce, which is not, again, into 100 million shares, and on a $2 stock, that is not tremendously big. I mean, the notional value of 3 million shares on a $2 stock is insignificant, right? Like for somebody to pair that off is not a gigantic amount. But we have less than a minute to go here. Tony's here next to me, replacing Sean, doing an unbelievable job, by the way. Can't thank you enough for that, Tony.
Thank you.
So I'm going to assume somebody else is obviously on the bell. It looks like maybe, I don't know if it's going to be Lucas. I don't know if it's going to be Fahad. Maybe they're going to pull someone out of the air. But better figure it out in the next 20 seconds, because this market is about to close, guys. I don't think I'll be taking the Didi trade. It looks like it's even getting smaller. The imbalance is almost gone, only 1 million now. But it is almost time for the bell. Let's drop the countdown. It looks like it is going to be Lucas, so no more Fahad or the Pokeroo. But here we go in 5, 4, 3, 2, and ring it.
Thank you, Lucas.
Thank you very much, Lucas. Being a New York stock, Didi will print. On the NASDAQ, things print pretty much right away. On the New York, they might delay the print a couple of seconds, but it closed at 31. It actually bounced about 5 points there. We'll quickly go to Brendan first so we can get the recap on the market, because I know you guys are waiting for me to live up to my word.
Pretty ugly, guys. Back to the downside again. 11 of 10 now. 11 weeks out of 10, or 10 weeks out of 11, I should say. It's Friday. To the downside. Here we go. This is how things wrapped up. NASDAQ leads 3.5%. 2.5%, 3%, 3% almost on the day for the S&P 500. Ugly top to bottom. As we said, more weakness in cryptocurrencies as well. 4% for Bitcoin, Ethereum, 7% to the downside. Yikes.
Thank you very much, Brendan. Not a great day in the market overall. Obviously, we ended pretty much on those lows. Bad day for crypto as well. But thank you guys so much for sticking with us, sticking around here, watching some trades, Tony dropping some knowledge, and for getting that like count up there, guys. I said I'm a man of my word, so it's going to be how do you want it. There's some noise in the background, so I'm going to do my best because I can barely hear my thoughts. But I love the way you activate your hips and put your back out. Got to play a wanting it so bad, about to pass out. I want to dig you, but I can't even lie about it, baby. Just alleviate your clothes. Time to fly about it. Catch you at a club. Oh yeah, you got me feeling. Body talking cook to me, but I can comprehend the meaning. Now if you want to roll with me, then here's your chance. Doing 80 on the freeway. Phonies, catch me if you can. Forgive me, I'm a rider. Still, I'm just a simple man. All I want is money plus the fame. I'm a simple man. Mr. International. Play it with a passport just like Aladdin. Get you anything you ask for. It's either him or me. The champagne, Hennessy. Notice how I always keep flossing on my enemies. Witness as we creep to a low speed. Peep what you don't need. Puff some more. What you don't need. Approaching women for the passion for the wrong thing. But I've been driven by attraction this wrong way. Your body is banging, baby. I love it when you fall. It's time to give it to daddy. Sugar, now tell me how you want it. Bars.
Jeez, that was incredible. That was incredible. Holy, I did not expect
I told
that.
you guys to get to I told you guys to get to 1,000 likes. And I like, by the way, like I really hope I didn't curse. I thought I got that one out of there, but anyways, just having a little bit of fun.
Wow.
Thank you guys so much. But on a more serious on a more serious note, I am a bit of a Tupac fan. So like that's one of my favorite joints. I also like R&B. That's why I picked that, because Casey, I think it was Jodeci was on that one. But anyways, Tupac, he's the man. Thank you guys in the chat. I hope you enjoyed it. Rest in peace, obviously, Tupac. Nothing against Biggie, but he's just my personal favorite. I want to give a big shout out, fist bump. Thank you, Tony, for filling in. Sean, who, believe me, you got to pry Sean away from the markets, right? But look, realistically, you got to take some time off. So I know he's going to enjoy an early start to the weekend with the family. I know he's busy because I know Gia's got baseball and everything there. So take it easy, Sean. Tony did a fantastic job for you. Thank you, Brendan, as always, doing a great job. Trader Pratt came back today with fire. Luca did a great job as well. I mean, Ian sitting in there doing his thing. And I always want to shout out to the ones and twos, because Fahad, obviously you're doing a great job, buddy, even though they don't get to see your face. And Lucas, taking the time to actually ring the bell today. You looked like you were absolutely thrilled to do it, buddy. How about you put a smile on next time? Lucas hates ringing the bell. I don't really know why. We'll have to figure it out. But thank you guys so much. We'll be right back next week. Come back, 8:30. We're here every day that the market is open. We're not going anywhere. This is Trader TV Live, and we'll see you next week. Bye, guys.